Drive the Majlis on wheels, the BMW 7 Series. Arrive in style, in comfort and right on time. Enjoy festive offers on the BMW 7 Series.
For over 6 generations, we have been serving our customers what matters to them most. Year after year, generation after generation, we've been able to present premium quality with best prices for our valuable customers. Welcome to IFCO. From our headquarters in Dubai, we oversee 80 world-class operations across 40 countries on 5 continents. Adding flavour to your life is what we pride on, and we do it best through our wide range of product segments. Whether it's sufficient movement by sea, extensive transportation by road, or expertise in procurement, handling and storage, we stay on top of our game to get our quality products from farms to your table as swiftly and smoothly as possible. Meanwhile, IFCO's professional products and services segment was specifically created to craft specialized ingredients for specific channels. To ensure that you have the right product for your business, our quality team ensures that each of our consignments is subjected to a thorough and rigorous quality control regime at every step of the process. Our state-of-the-art facilities help us to achieve this, because innovation and R&D lie at the heart of IFCO. And that's why, for over 45 years, we've anticipated needs and delivered above expectations to earn the confidence of our customers.
ये आजकल के बिजनेसमैन भी ना छोटे सपने तो देखते ही नहीं। अब अनमोल को ही ले लो, 4 साल से जानता हूँ उसे, टैक्स कंसल्टेंट हूँ उसका।
2 क्लॉजेज है ना सर, वो मुझे समझ में नहीं आया।
उसने गारमेंट शॉप खोल ली, केबल फैक्ट्री डाल दी, प्रॉपर्टीज भी जोड़ ली, पर मजाल है कि बिजनेस का पैशन थोड़ा भी कम हुआ।
10,000 मीटर। आई एम सॉरी, मैंने टाइम देखा ही नहीं सर।
न चैन से रहता है न रहने देता है, दिन रात सुबह शाम बस कॉल कॉल और कॉल। राकेश जी, रिटर्न्स फाइल कब करोगे? ईवे बिल कैसे बनाओ? यहाँ तक कि
गाड़ी कौन सी लूं सर
भी पूछता है।
सर गाड़ी ले ली सर।
लेकिन फिर जब आपसे नहीं पूछूंगा तो किससे पूछूंगा कहता है ना, तो पता चल ही जाता है कि कितना भरोसा करता है वो मुझ पर। इसलिए सोच रहा हूं कुछ दूं उसे, जो न सिर्फ उसके बड़े बड़े सपनों के काम आए, बल्कि मेरे काम को भी थोड़ा आसान बनाए।
पेश है टैली प्राइम, टेक्नोलॉजी में एक नया नाम जो बढ़ाए आपके बिजनेस की शान। आजमा के देखिए आज ही।
We are HLB Hampt. As a member of the award-winning Global Advisory and Accounting Network, HLB International. We've come a long way since our regional presence was first established in 1999. Now, over 20 years later, HLB Hampt has emerged as the foremost and preferred business advisor in the UAE and the Middle East, with 7 offices across Abu Dhabi, Dubai and the Northern Emirates. 250 plus professionals, and 3,000 plus clients, from SMEs to large corporates, including Fortune 500 listed companies. HLB Hamped helps business owners achieve borderless growth in the local region and beyond by offering award-winning services across all verticals that combine technological innovation and human collaboration. HLB Hamped. Together, we make it happen.
UHY James Chartered Accountants, led by Mr. James Matthew, is the exclusive member form of UHY International in the UAE. Headquartered in the UK, spread across 101 countries, 330 business centers, with over 8,500 professionals, UHY International is the 18th largest accounting network globally, with audit, advisory, task, risk assurance, technology, and cybersecurity services. UHY James is proudly one of the 17 regulated auditors with DFSA and ADGM. 150 years of practice among 5 partners. UHY James Chartered Accountants is committed to your growth story.
Our team of over 100 highly qualified and experienced professionals are committed to add value to your business. AML Framework, the 7 pillars approach, policy and procedures, risk profiling, screening, and monitoring solutions. AML training. Emirates Chartered Accountants Group started the journey in 2005 by a team of finance professionals. United Auditing is the audit division of Emirates Chartered Accountants Group, an ISO 9001-2015 certified company, with branches all across the UAE and Bahrain, UK and India. Auditing and assurance, taxation, transaction advisory, mergers and acquisition, accounting and bookkeeping, CFO services, corporate finance, company incorporation. Emirates Chartered Accountants Group, ready to serve you.
Dad, see what I've made!
Wow, that looks like our new home, huh?
It's as simple as this to make your dream home come true with Bank of Baroda. Easy home loans in UAE and India with simple procedures, quick approvals and low interest rates.
Dad, let's go for a drive in a new car!
Let's go!
Drive your dream car with Bank of Baroda. Speedy car loans at low interest rates. Imagine it and it can be yours. Bank of Baroda, India's international bank.
Drive the Majlis on wheels, the BMW 7 Series. Arrive in style, in comfort and right on time. Enjoy festive offers on the BMW 7 Series.
For over 6 generations, we have been serving our customers what matters to them most. Year after year, generation after generation, we've been able to present premium quality with best prices for our valuable customers. Welcome to IFCO. From our headquarters in Dubai, we oversee 80 world-class operations across 40 countries on 5 continents. Adding flavour to your life is what we pride on, and we do it best through our wide range of product segments. Whether it's efficient movement by sea, extensive transportation by road, or expertise in procurement, handling and storage, we stay on top of our game to get our quality products from farms to your table as swiftly and smoothly as possible. Meanwhile, IFCO's professional products and services segment was specifically created to craft specialized ingredients for specific channels. To ensure that you have the right product for your business, our quality team ensures that each of our consignments is subjected to a thorough and rigorous quality control regime at every step of the process. Our state-of-the-art facilities help us to achieve this, because innovation and R&D lie at the heart of IFCO. And that's why
ये किसका इतना बड़ा? इससे पहले किसका था ये? Hello, hello, hello. Oh, sorry. Hello. A positive life is more than something that we can control. It entails a series of thought processes, belief, and overall mindset. And yes, insurance is one such element in everyone's life. Insurance is a tool to control.
ये आजकल के बिजनेसमैन भी ना छोटे सपने तो देखते ही नहीं। अब अनमोल को ही ले लो, 4 साल से जानता हूँ उसे, टैक्स कंसल्टेंट हूँ उसका।
2 क्लॉजेज है ना सर, वो मुझे समझ में नहीं आया।
उसने गारमेंट शॉप खोल ली, केबल फैक्ट्री डाल दी, प्रॉपर्टीज भी छोड़ दी, पर मजाल है कि बिजनेस का पैशन थोड़ा भी कम हुआ।
10,000 मीटर। आई एम सॉरी, मैंने टाइम देखा ही नहीं सर। वो
न चैन से रहता है न रहने देता है, दिन रात सुबह शाम बस कॉल कॉल और कॉल। राकेश, ये रिटर्न्स फाइल कब करोगे? ईवे बिल कैसे बनाओ? यहाँ तक कि
गाड़ी कौन सी लूं सर
भी पूछता है।
सर गाड़ी ले ली सर।
लेकिन फिर जब आपसे नहीं पूछूंगा तो किससे पूछूंगा कहता है ना, तो पता चल ही जाता है कि कितना भरोसा करता है वो मुझ पर। इसलिए सोच रहा हूं कुछ दूं उसे, जो न सिर्फ उसके बड़े बड़े सपनों के काम आए, बल्कि मेरे काम को भी थोड़ा आसान बनाए।
पेश है टैली प्राइम, टेक्नोलॉजी में एक नया नाम जो बढ़ाए आपके बिजनेस की शान। आजमा के देखिए आज ही।
We are HLB Hamped. As a member of the award-winning Global Advisory and Accounting Network, HLB International. We've come a long way since our regional presence was first established in 1999. Now, over 20 years later, HLB Hamped has emerged as the foremost and preferred business advisor in the UAE and the Middle East, with 7 offices across Abu Dhabi, Dubai and the Northern Emirates. 250 plus professionals and 3,000 plus clients, from SMEs to large corporates, including Fortune 500 listed companies. HLB Hampt helps business owners achieve borderless growth in the local region and beyond by offering award-winning services across all verticals that combine technological innovation and human collaboration. HLB Hampt. Together, we make it happen.
UHY James Chartered Accountants, led by Mr. James Matthew, is the exclusive member firm of UHY International in the UAE. Headquartered in the UK, spread across 101 countries, 330 business centers, with over 8,500 professionals, UHY International is the 18th largest accounting network globally, with audit, advisory, task, risk assurance, technology, and cybersecurity services. UHY James is proudly one of the 17 regulated auditors with DFSA and ADGM. 150 years of practice among 5 partners. UHY James Chartered Accountants is committed to your growth story.
Our team of over 100 highly qualified and experienced professionals are committed to add value to your business. AML Framework, the 7 Pillars Approach, Policy and Procedures, Risk Profiling, Screening, and Monitoring Solutions. AML Training. Emirates Chartered Accountants Group started the journey in 2005 by a team of finance professionals. United Auditing is the audit division of Emirates Chartered Accountants Group, an ISO 9001-2015 certified company, with branches all across the UAE and Bahrain, UK and India. Auditing and assurance, taxation, transaction advisory, mergers and acquisition, accounting and bookkeeping, CFO services, corporate finance, company incorporation. Emirates Chartered Accountants Group, ready to serve you.
Dad, see what I've made!
Wow, that looks like our new home, huh?
It's as simple as this to make your dream home come true with Bank of Baroda. Easy home loans in UAE and India with simple procedures, quick approvals and low interest rates.
Dad, let's go for a drive in a new car!
Let's go!
Drive your dream car with Bank of Baroda. Speedy car loans at low interest rates. Imagine it and it can be yours. Bank of Baroda, India's international bank.
Drive the Majlis on wheels, the BMW 7 Series. Arrive in style, in comfort and right on time. Enjoy festive offers on the BMW 7 Series.
For over 6 generations, we have been serving our customers what matters to them most. Year after year, generation after generation, we've been able to present premium quality with best prices for our valuable customers. Welcome to IFCO. From our headquarters in Dubai, we oversee 80 world-class operations across 40 countries on 5 continents. Adding flavour to your life is what we pride on, and we do it best through our wide range of product segments. Whether it's efficient movement by sea, extensive transportation by road, or expertise in procurement, handling and storage, we stay on top of our game to get our quality products from farms to your table as swiftly and smoothly as possible. Meanwhile, IFCO's professional products and services segment was specifically created to craft specialized ingredients for specific channels. To ensure that you have the right product for your business, our quality team ensures that each of our consignments is subjected to a thorough and rigorous quality control regime at every step of the process. Our state-of-the-art facilities help us to achieve this, because innovation and R&D lie at the heart of IFCO. And that's why for over 45 years we've anticipated needs and delivered above expectations to earn the confidence of our customers.
ये आजकल के बिजनेसमैन भी ना छोटे सपने तो देखते ही नहीं। अब अनमोल को ही ले लो, 4 साल से जानता हूँ उसे, टैक्स कंसल्टेंट हूँ उसका।
2 क्लॉजेज है ना सर, वो मुझे समझ में नहीं आया।
उसने गारमेंट शॉप खोल ली, केबल फैक्ट्री डाल दी, प्रॉपर्टीज भी जोड़ ली, पर मजाल है कि बिजनेस का पैशन थोड़ा भी कम हुआ।
10,000 मीटर। आई एम सॉरी, मैंने टाइम देखा ही नहीं सर। वो
न चैन से रहता है न रहने देता है, दिन रात सुबह शाम बस कॉल कॉल और कॉल। राकेश जी, रिटर्न्स फाइल कब करोगे? ईवे बिल कैसे बनाओ? यहाँ तक कि
गाड़ी कौन सी लूं सर
भी पूछता है।
सर गाड़ी ले ली सर।
लेकिन फिर जब आपसे नहीं पूछूंगा तो किससे पूछूंगा कहता है ना, तो पता चल ही जाता है कि कितना भरोसा करता है वो मुझ पर। इसलिए सोच रहा हूं कुछ दूं उसे, जो न सिर्फ उसके बड़े बड़े सपनों के काम आए, बल्कि मेरे काम को भी थोड़ा आसान बनाए।
पेश है टैली प्राइम, टेक्नोलॉजी में एक नया नाम जो बढ़ाए आपके बिजनेस की शान। आजमा के देखिए आज ही।
We are HLB Hamped. As a member of the award-winning global advisory and accounting network, HLB International. We've come a long way since our regional presence was first established in 1999. Now, over 20 years later, HLB Hamped has emerged as the foremost and preferred business advisor in the UAE and the Middle East, with 7 offices across Abu Dhabi, Dubai and the Northern Emirates. 250 plus professionals, and 3,000 plus clients, from SMEs to large corporates, including Fortune 500 listed companies. HLB Hamped helps business owners achieve borderless growth in the local region and beyond by offering award-winning services across all verticals that combine technological innovation and human collaboration. HLB Hamped. Together, we make it happen.
UHY James Chartered Accountants, led by Mr. James Matthew, is the exclusive member form of UHY International in the UAE. Headquartered in the UK, spread across 101 countries, 330 business centers, with over 8,500 professionals, UHY International is the 18th largest accounting network globally, with audit, advisory, task, risk assurance, technology, and cybersecurity services. UHY James is proudly one of the 17 regulated auditors with DFSA and ADGM. 150 years of practice among 5 partners. UHY James Chartered Accountants is committed to your growth story.
Our team of over 100 highly qualified and experienced professionals are committed to add value to your business. AML Framework, the 7 pillars approach, policy and procedures, risk profiling, screening, and monitoring solutions. AML training. Emirates Chartered Accountants Group started the journey in 2005 by a team of finance professionals. United Auditing is the audit division of Emirates Chartered Accountants Group, an ISO 9001-2015 certified company, with branches all across the UAE and Bahrain, UK and India. Auditing and assurance, taxation, transaction advisory, mergers and acquisition, accounting and bookkeeping, CFO services, corporate finance, company and corporation. Emirates Chartered Accountants Group, ready to serve you.
Dad, see what I've made!
Wow, that looks like our new home, huh?
It's as simple as this to make your dream home come true with Bank of Baroda. Easy home loans in UAE and India with simple procedures, quick approvals and low interest rates.
Dad, let's go for a drive in a new car!
Let's go!
Drive your dream car with Bank of Baroda. Speedy car loans at low interest rates. Imagine it and it can be yours. Bank of Baroda, India's international bank.
Drive the Majlis on wheels, the BMW 7 Series. Arrive in style, in comfort and right on time. Enjoy festive offers on the BMW 7 Series.
For over 6 generations, we have been serving our customers what matters to them most. Year after year, generation after generation, we've been able to present premium quality with best prices for our valuable customers. Welcome to IFCO. From our headquarters in Dubai, we oversee 80 world-class operations across 40 countries on 5 continents. Adding flavour to your life is what we pride on, and we do it best through our wide range of product segments. Whether it's efficient movement by sea, extensive transportation by road, or expertise in procurement, handling and storage, we stay on top of our game to get our quality products from farms to your table as swiftly and smoothly as possible. Meanwhile, IFCO's professional products and services segment was specifically created to craft specialized ingredients for specific channels. To ensure that you have the right product for your business, our quality team ensures that each of our consignments is subjected to a thorough and rigorous quality control regime at every step of the process. Our state-of-the-art facilities help us to achieve this, because innovation and R&D lie at the heart of IFCO. And that's why, for over 45 years, we've anticipated needs and delivered above expectations to earn the confidence of our customers.
ये आजकल के बिजनेसमैन भी ना छोटे सपने तो देखते ही नहीं। अब अनमोल को ही ले लो, 4 साल से जानता हूँ उसे, टैक्स कंसल्टेंट हूँ उसका।
2 क्लॉजेज है ना सर, वो मुझे समझ में नहीं आया।
उसने गारमेंट शॉप खोल दी, केबल फैक्ट्री डाल दी, प्रॉपर्टीज भी जोड़ दी, पर मजाल है कि बिजनेस का पैशन थोड़ा भी कम हुआ।
10,000 मीटर। आई एम सॉरी, मैंने टाइम देखा ही नहीं सर।
न चैन से रहता है न रहने देता है, दिन रात सुबह शाम बस कॉल कॉल और कॉल। राकेश जी, रिटर्न्स फाइल कब करोगे? ईवी बिल कैसे बनाओ? यहाँ तक कि
गाड़ी कौन सी लूं सर
भी पूछता है।
सर गाड़ी ले ली सर।
लेकिन फिर जब आपसे नहीं पूछूंगा तो किससे पूछूंगा कहता है ना, तो पता चल ही जाता है कि कितना भरोसा करता है वो मुझ पर। इसलिए सोच रहा हूं कुछ दूं उसे, जो न सिर्फ उसके बड़े बड़े सपनों के काम आए, बल्कि मेरे काम को भी थोड़ा आसान बनाए।
पेश है टैली प्राइम, टेक्नोलॉजी में एक नया नाम जो बढ़ाए आपके बिजनेस की शान। आजमा के देखिए आज ही।
We are HLB Hamped. As a member of the award-winning Global Advisory and Accounting Network, HLB International. We've come a long way since our regional presence was first established in 1999. Now, over 20 years later, HLB Hamped has emerged as the foremost and preferred business advisor in the UAE and the Middle East, with 7 offices across Abu Dhabi, Dubai and the Northern Emirates. 250 plus professionals and 3,000 plus clients, from SMEs to large corporates, including Fortune 500 listed companies. HLB Hamped helps business owners achieve borderless growth in the local region and beyond by offering award-winning services across all verticals that combine technological innovation and human collaboration. HLB Hamped. Together, we make it happen.
UHY James Chartered Accountants, led by Mr. James Matthew, is the exclusive member firm of UHY International in the UAE. Headquartered in the UK, spread across 101 countries, 330 business centers, with over 8,500 professionals, UHY International is the 18th largest accounting network globally, with audit, advisory, task, risk assurance, technology, and cybersecurity services. UHY James is proudly one of the 17 regulated auditors with DFSA and ADGM. 150 years of practice among 5 partners. UHY James Chartered Accountants is committed to your growth story.
Our team of over 100 highly qualified and experienced professionals are committed to add value to your business. AML Framework, the 7 Pillars Approach, Policy and Procedures, Risk Profiling, Screening, and Monitoring Solutions. AML Training. Emirates Chartered Accountants Group started the journey in 2005 by a team of finance professionals. United Auditing is the audit division of Emirates Chartered Accountants Group, an ISO 9001-2015 certified company, with branches all across the UAE and Bahrain, UK and India. Auditing and assurance, taxation, transaction advisory, mergers and acquisition, accounting and bookkeeping, CFO services, corporate finance, company and corporation. Emirates Chartered Accountants Group, ready to serve you.
Dad, see what I've made!
Wow, that looks like our new home, huh?
It's as simple as this to make your dream home come true with Bank of Baroda. Easy home loans in UAE and India with simple procedures, quick approvals and low interest rates.
Dad, let's go for a drive in a new car!
Let's go!
Drive your dream car with Bank of Baroda. Speedy car loans at low interest rates. Imagine it and it can be yours. Bank of Baroda, India's international bank.
check. All good? Mani ready? Okay. So let's begin the session. A positive life is more than something that we can control. It entails a series of thought processes, beliefs, and an overall mindset. And yes, insurance is one such element in everyone's life. Insurance is a tool to control unforeseen risks. Chief guest of the day, Mr. Christopher. Guest of honor, CA Vibha Padalkar. Keynote speaker, CA Vinay Surana. Guest speaker, CA Anes Srivastav. Chairman, CA Anurag Chaturvedi. Fellow members, seniors in profession, past chairman, friends, sponsors, and my colleagues in the managing committee. A very good afternoon to all of you and Ramadan Kareem. On behalf of the managing committee, I welcome each one of you to our hybrid session on the future of insurance, uncover myths and tap opportunities to secure you. I express my sincere gratitude to today's speakers for accepting our invitation. I also thank each one of you for your active participation in the first weekend of the holy month of Ramadan. How many of us believe that insurance is just to manage unwarranted risk? Only to manage unwarranted risk? No one. That's great. It's good to see that everybody is believing that insurance is much more than securing the unwarranted risk. It's a belief, but to contrary to this belief, in today's session, speaker will enlighten us that in the current business dynamics, insurance is not only a way to manage risk, it is the necessity of the time. Now, may I request everyone to please rise for the UAE and Indian National Anthem and ICI motto. Request our technical team to play.
अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैत 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 एतद्वैत.
Thank you very much. You can take your seats. It's always essential to recognize our sponsors who always support us. Thanks to our title sponsor, Saudi German Health, principal sponsors, Pan Emirates, AGMC, Tele, Lulu, and IFCO, platinum sponsors, Emirates Chartered Accountant Group, WMS, UHY James, HLB Hunt, FMCG partner, Aktia, media partner, Khalis Times, institutional partner, Delhi Private School, and banking partner, Bank of Baroda. Let us appreciate our sponsor with a big round of applause. Thank you. Ladies and gentlemen, I am sure that there will be many critical takeaways for each one of us in today's session. In the current enterprising business environment of the UAE and escalated use of technology, we all are curious to know the regulatory changes and their impact on technology and sustainability. Who can better explain this than our chief guest, Mr. Christopher, the Chief Executive of Dubai Financial Services Authority. And to introduce our chief guest of the day, I would like to invite our Treasurer, CA Jaiprakash Agrawal, on the stage.
Good evening or good afternoon and Ramadan Kareem, because this is our first event after Ramadan has started. 1st October 2021. What happened that day? That was the day when we marked in UAE Expo. Expo arrived, and not only Expo arrived, two things happened. That also marked the arrival of Mr. Christopher in Davza. He joined Davza on 1st October 2021 along with Expo. So I don't know what was good, but both joined together on 1st October 2021. Before appointment in Davza, Krish worked from 2017 to 2021 at the Bill and Melinda Gates Foundation as Senior Advisor for Supervisory and Regulatory Policy in Financial Services for the Poor. He led the foundation global initiative to promote regulations and technology that expand the use of digital finance services among underserved women and unbanked. His career in supervision began as a bank examiner at the Federal Reserve Bank of New York. Over the next 24 years, he held a number of supervisory and policy roles, including service as the senior supervisor for one of the largest US banks and senior vice president of regional, community, foreign institution, consumer compliance supervision, overseeing 200 US and foreign firms. Externally, Chris co-led the International Monetary Fund 2016 evaluation of the UK's post-crisis approach to banking supervision on secondment. He has also earned a certificate in digital money and blockchain. He speaks fluent German, some Japanese and French, and is looking forward to learn Arabic. Before I welcome Mr. Christopher, sir, don't only learn Arabic, we will teach you Hindi as well. You come to 3 or more 4 sessions in our ICI and you will be fluent in Hindi. A very humble person. With a round of applause, please welcome a humble, intelligent Mr. Christopher Calabia.
Namaste and hello. I'm honored to join this event today. Now, for more than 70 years, the Institute of Chartered Accountants of India has served both as a regulator and an advocate for the profession, becoming the world's second largest accounting body in the process. I'm particularly pleased to salute the leaders and members of the Dubai chapter in your Ruby Year celebration. For 40 years, you have promoted the importance of education, development, and adherence to the highest ethical standards among your now more than 3,000 members. In that regard, the Dubai Financial Services Authority and the ICAI share many goals. We encourage firms under our supervision to maintain accurate, reliable, and timely information on their financial activities. Accounting professionals employed by those firms must keep their knowledge of international and local accounting standards current. They must consider how emerging risks may affect the valuation of assets and liabilities. They must nurture sound leadership and communication skills to share their findings and exhibit strong moral and ethical behavior so that no one questions their integrity. One important way that the ICAI supports its members in achieving these myriad goals is by spreading knowledge and creating goodwill, as your chapter's tagline suggests, which is precisely the point of today's meeting. More broadly, the DFSA's relationship to India itself runs deep. We employ staff from more than 20 countries, and India is home to one of the largest portions of our expatriate staff. We maintain strong working relationships with authorities in India, including with the Securities and Exchange Board of India, the Reserve Bank of India, and the newly created International Financial Services Center Authority. You've asked me to share a regulator's view on the future of finance and insurance, as the sign here says. Dubai is a fitting venue for this topic. The original name for Dubai, Al-Wasl, means connection in Arabic. Dubai's role as a connector of people and ideas is especially evident today in the Dubai International Financial Center, or the DIFC, the 110-acre zone for which the DFSA serves as the regulator of financial services. Like Dubai itself, the multitude of companies and people from around the world who work in the DIFC make it a dynamic market for innovation, a trait that I know India shares well. In a prior role at the Bill and Melinda Gates Foundation, I was fortunate to spend some time working in India on financial inclusion matters and saw firsthand some of the innovations, such as the Aadhaar system, the revolutionary digital identity system. I saw how innovative mobile payments platforms can improve the lives of families by making it easier, safer, and less expensive to make payments, to hold funds, and to access credit. I met regulators in India who found ways to introduce these innovations and technologies into the market prudently. Many of these innovations in India have inspired new thinking in markets around the world, helping to build the future of financial services and to build a financial system that better serves the needs of all. In the spirit of advocating for innovations that will benefit everyone, I'd like to address 3 subjects related to change today. I'll begin with the future of insurance and how technology is changing this industry. Second, I'll turn to the regulator's perspective on these changes and why I believe that regulation can be a facilitator rather than a hindrance on innovation. And finally, I'll close with the change that all of us actually need to slow or stop, namely climate change, and the role that accountants can play in promoting the adoption of key principles for sustainable finance and to help protect our environment. Now, throughout the pandemic, technology enabled many of us to work remotely. Regulators at the DFSA were able to execute our duties, and DIFC insurance firms, likewise, were able to conduct business with no significant adverse effects on their performance. Today, the DFSA supervises 77 insurance-related firms, of which 18 are reinsurers, 26 are reinsurance brokers, and 33 are reinsurance managers and underwriting agents. Based on unaudited quarterly 2021 returns, DIFC firms underwrote an aggregate $1.8 billion in gross written premiums, which is up slightly from $1.7 billion in 2020. They brokered $1.1 billion in gross written premiums, which is down slightly from $1.3 billion in 2020. Now, that decline in brokerage numbers reflects the booking of some treaty businesses elsewhere for some international firms. So overall, activity levels in the DIFC insurance sector are up, and contrary to expectations, they grew substantially over the past 2 years. So what trends are we seeing in technology for insurers? We see many opportunities for insurers and reinsurers, and I'll refer to them as insurers today, as well as for their customers in terms of greater efficiency and lower costs. But the bigger and more strategic question that I'll turn to in a moment is how technology may change the business of insurance and regulation. First, from a customer perspective, technology is already enhancing the purchasing experience, and efficiencies are giving way to lower customer acquisition costs. For example, one US-based insurer offers policies to homeowners with zero paperwork, lower fees, and immediate responses from bots and machine learning algorithms. The insurer claims to provide cover in just 90 seconds and to pay claims in as few as 3 minutes. Impressively, the insurer explains that its use of these technologies enables it to charge 80% less for its cover. On the claims side of the business, technology innovations are simplifying how customers file claims. Some insurers use automated digital platforms to file and record insurance claims. Drones obtain aerial pictures of damaged property to deliver faster claims processing times without putting claims adjusters at risk. And artificial intelligence is accelerating claims processing, with some insurers reducing the time required to mere minutes. One well-known Chinese insurer has used data mining and deep analysis to create a machine learning model that in 1 year, it says, prevented over $300 million in fraudulent claims while achieving a 78% accuracy rate in its fraud detection. The bigger and more strategic question is how technology may change the business of insurance itself. Now, this is, of course, a far harder question to answer, as it involves speculating about uses for technology in the insurance business that we haven't thought of yet. But there are some clues. For one, smart contracts may almost completely automate the insurance process. In France, one insurance company offers travelers a product to compensate them for delayed flights without the traveler ever having to notify the company. Using the Ethereum blockchain, the insurer monitors public data feeds on flight delays and pays claims to insured travelers automatically when a traveler's flight is delayed or canceled. The use of automated tools like blockchain may help to drive the cost of providing insurance down such that insurers can offer policies even to low-income consumers who lack access to any kinds of formal financial services. The British charity Oxfam supported a pilot project in Sri Lanka recently to offer microinsurance to farmers who previously could not afford such policies and weren't familiar with the claims process. The use of smart contracts and a blockchain platform to monitor weather events eliminated the need for farmers to file claims, and the insurer did not need to dispatch claims adjusters to survey losses. In this case, the technology made it possible to expand access to insurance products to people who were previously excluded, including some of society's most vulnerable members, such as smallholder farmers. Technology such as smart devices and the Internet of Things can also provide insight into real-time data and send insurers or customers information to help change behavior and reduce the potential for harm or loss. In India, several providers are testing automobile insurance products in regulatory sandboxes that adjust insurance premiums based on how often and how far a policyholder drives their car, a product model called pay-as-you-drive, by monitoring global positioning systems data from satellites. Others are testing similar pay-how-you-drive insurance products that adjust how fast a policyholder driver drives, how hard they brake, and so on, by monitoring real-time data from their cars. Customers who consent to this monitoring can reduce usage of their cars or drive more safely, which reduces their premium. It also reduces the likelihood that the insurer might need to cover a loss. Now, these are just a few examples of technology uses that are disrupting the insurance industry by eliminating the traditional claims process, by expanding access to people who previously couldn't afford insurance products, and by changing policyholders' behavior and reducing the likelihood that they'll need to draw on their insurance policy. This leads me to my second topic, namely the regulator's perspective on these changes stemming from innovation. As guardians of the safety and soundness of the financial system, regulators face a dilemma. We want consumers and businesses to enjoy these and other benefits arising from new technology or new business models today. Yet we don't know whether these new innovations may introduce bigger risks into the financial system tomorrow. When regulators grapple with dilemmas, market participants often accuse us of being resistant to change. I have a different perspective. As custodians for the financial market, we always seek a responsible and objective view of new technology and business practices. We fully support and encourage the use of technology in the delivery of financial services, so long as it complies with regulations. It therefore follows that we do not encourage nor support any innovation that comes at the expense of customer protection, market integrity, or financial stability. all of which are core objectives for a regulator. Now, getting the right balance does take discipline. When a new and exciting product arrives on the scene, we regulators have to restrain ourselves from jumping on the bandwagon. Instead, we have to ask ourselves, what could go wrong? And how could this harm a customer, financial stability, or the DIFC's reputation? It is with this lens at hand that regulators approach all new financial services and products and technologies. Now, given that data underpins almost all aspects of digitalization, key questions for regulators center on customer data protection. The financial services industry today has access to more customers than possibly ever before. Having a better understanding of your customers often means holding potentially sensitive information, such as health data. Privacy and cybersecurity are therefore often at the forefront in terms of regulatory focus. Now, because providers hold and can access so much sensitive data, using data ethically is consequently another important consideration for all financial service professionals and accountants, and not solely regulators. Basing the decision to offer an insurance product and at what price on where a person lives or works could lead a provider to focus on factors that may not be relevant to an individual's creditworthiness or insurability, such as the ethnic concentration or income level of a neighborhood. In the interest of customer protection, regulators seek assurance that data is accurate, that it is relevant for determining whether to extend a product or service to a customer, and that its acquisition, its ongoing use, meet regulatory requirements around customer consent. Accountants and auditors can help us to ensure that the data that providers gather and use meet all of these conditions. Now, another question that regulators are already grappling with is that some providers with access to data about millions of individuals are using that data to ensure low-risk customers only. This practice undermines the traditional philosophy of insurance that the industry should offer coverage to individuals with a mix of risk profiles and rely in part on diversification to help manage their business. It also leads to greater financial exclusion. Ultimately, we want to make sure that regulation does not act as a barrier to innovation. We encourage innovators to build safeguards into their businesses to meet policyholder protection and financial stability objectives. But we don't want regulatory compliance costs to outstrip innovation gains, rendering technological developments pointless. To counteract some of these regulatory barriers, the DFSA has adopted several measures to facilitate innovation and the use of new technology. First, the DFSA applies its regulatory requirements on a principles basis. We are technology agnostic and expect firms to have the necessary controls and safeguards, regardless of whether the business model is traditional or innovative. Second, we are aware that startups can face hurdles when it comes to meeting the often large capital requirements or other regulatory requirements. In response, we offered a license sandbox known as the DFSA Innovation Testing License Program, or ITL, which enables ITL holders to test new and innovative financial products, services, and business models, sometimes with relaxed regulatory requirements. Note that we never relax any requirements related to anti-money laundering, and participants are subject to restrictions to protect customers. By conducting live testing of new technology, both the provider and the DFSA can evaluate the technology's viability and security over a 12-month period. Third, we know that cybersecurity is one of the top risks for all corporations and governments. To help protect all firms against these threats, in January of 2020, the DFSA launched our Cyber Threat Intelligence Platform, also known as the DFSA TIP. It is the first regulator-led platform of its kind in the region, and it helps firms to share information on malware and other dangers through a public-private partnership. Since its launch, we've posted over 1.6 million attributes for 57,000 cyber threats. We continue to grow the platform and intend to extend it to the wider financial services community in the region. With transactions taking place increasingly online, data being stored in the cloud, and money crisscrossing the world at the speed of light, the need for robust cybersecurity resilience is greater than ever. More broadly, we have partnered with other authorities across the UAE to foster greater confidence in the market and help ensure that firms use technology in a safe and secure manner. We work closely with the UAE Central Bank, the Financial Services Regulatory Authority at the Abu Dhabi Global Markets, and the Securities Commodities Authority in 2021 to publish the guidelines for financial institutions on the use of enabling technologies. The guidelines set out principles financial institutions should follow when using application programming interfaces, cloud computing, biometrics, big data, artificial intelligence, and distributed ledger technology, also known as blockchain. Underlying these current developments is digitalization. Institutions that don't keep up with technology today may find that they get left behind tomorrow. And that's true for both the private and the public sector. We at the DFSA are advancing our own digitalization program. We are already among the first regulators to move much of our infrastructure to the cloud, beginning with most of our communications and messaging platforms. Our next step will be to move our data collection and analytical tools to the cloud as well. We expect to simplify firms' interactions with us even more. We likewise want to make it easier for our staff to access and use information and data that firms provide, and to draw on other sources of information available in the marketplace. One principle we're following is that data should be entered only once. If a firm provides a figure to us through an online platform, any authorized user in the DFSA should be able to access and manipulate that data. Another principle for us is to have a single source of truth internally. Staff shouldn't need to access different platforms and sometimes different technology to aggregate data that's been collected across the DFSA. While we're building that single source of truth, we're also developing and using various SUP tech tools or supervisory technology tools. We already have some analytical tools that help us screen data for easier decision making, and we plan to build more. We're using robotics principles automation to process data quickly and efficiently. We rely on automatic screening and background checks. Ultimately, we'd like to develop modules for early warning systems to potentially draw on new technologies like natural language processing to help us handle unstructured data like text files. And in the future, I'd like to leverage artificial intelligence to help us spot patterns and trends. Our goals for digitalization is partly to reduce regulatory burden on firms. Equally important, we want to increase our efficiency and our effectiveness as regulators, and I would welcome all of your recommendations in that regard. So far, I've talked about changes that we want and how regulation can facilitate beneficial innovations. But there's one change that all of us need to work together to slow or even stop, and that is climate change. Some may question whether financial services regulators have a role to play regarding climate change. They suggest that we should focus solely on client protection, market integrity, and financial stability. I have a different view. Unchecked temperature increases from climate change may increase the frequency and severity of natural catastrophes. Severe weather events, in turn, may impose extraordinary costs on society and destabilize the financial sector and the wider economy. These potential consequences put climate change squarely within our remit. Now, climate change is, as they say, non-linear with no points of return. This means that its effects are likely to be significant and possibly irreversible. How bad this gets depends on what we do now. The message that emerged from the United Nations COP26 conference in Glasgow last year is clear. The time for action is now or never. And earlier this week, the UN's Intergovernmental Panel on Climate Change stated that without immediate and deep emissions reductions across all sectors, limiting global warming to beyond 1.5 degrees Celsius will not be possible, exceeding what some believe is the tipping point for severely adverse outcomes. All of us, regulators and accountants, can do more to adopt key principles for sustainable finance in the industry. I'll mention two today where ICAI members and other accountants can become important allies in the fight against climate change. One such principle that we at the DFSA espouse is that for all firms to incorporate sustainability assessments into their risk management functions and frameworks. Thank you. We want firms to identify potential risks arising from climate change and assess their impact on existing business models. This includes developing tangible metrics to aid decision-making and risk management. All firms should quantify their potential effects, but at the very least, everyone should have undertaken qualitative assessments by now. Accountants will play a central role in developing metrics to measure climate risk, monitor individual providers' progress towards net zero targets, and thereby help providers respond to excessive risks. A second principle is for all firms to adopt clear sustainability disclosures. Disclosures need consistent, trustworthy, and comparable sustainability disclosures. Decision makers need consistent, trustworthy, and comparable sustainability disclosures that set out progress towards achieving sustainability goals. Disclosures, both qualitative and quantitative, internal and external, are effective tools for stakeholders to hold boards, senior management, and other key decision makers accountable. If you believe the less said, the better about your work related to environmental, social, and governance-related initiatives, or ESG, remember that others may interpret your paucity of disclosures unfavorably as a signal that you are not able to manage your sustainability risks appropriately. At the DFSA, we've launched a task force on sustainable finance with industry participants to transform these two principles into practical examples for industry to build sustainability into risk management practices and disclosures. I expect that we will publish findings and practical recommendations on what firms can do in the future. In the near term, one source of guidance for accountants and providers comes from the Task Force on Climate Financial Disclosures, or TCFD, which was established in 2015 by the Financial Stability Board in Basel to identify the information needed to assess and price climate-related risks prudently. The TCFD's June 2017 recommendations have become a benchmark for many jurisdictions to adopt relevant, consistent, and comparable disclosures. The recommendations cover the core elements of governance, strategy, risk management, and metrics and targets. The fourth TCFD status report from October of 2021 highlights the greatest progress to date on TCFD-F adoption, but we still have a long way to go. I would encourage you to read their publications as they provide excellent guidance on implementing the recommendations. They are an obvious starting point for global climate disclosure frameworks. The development of disclosure standards is headed in the right direction, but we can't rest yet. We need to do more, given the urgency of taking action to meet climate targets. While I would prefer for the market to solve the disclosure challenges by itself, progress globally is sparse and uneven. Presently, climate data disclosures range from voluntary in the US to mandatory in France, to a comply or explain approach in Australia. And there are large variations in TCFD-inspired voluntary standards. Time is a luxury we simply don't have. On the international front, the US Securities and Exchange Commission voted to issue proposals for mandatory climate risk reporting by public companies because the lack of investment-grade sustainability data reduces investors' abilities to make sound decisions. We at the DFSA similarly take a dim view of greenwashing that is giving the false impression that products and services are more environmentally friendly than they actually are. We are sensitive to the risk of greenwashing because we believe sustainable is attainable, but only when you really try. Accountants and financial professionals are instrumental in helping businesses transition towards long-term sustainability strategies. You can act as strategic business partners by applying your skills to help management plan, forecast, set targets, and monitor progress. After all, what gets measured gets done. Using existing and developing frameworks, you can provide better corporate information and develop metrics to facilitate clearer communications with stakeholders. You are well versed in identifying information gaps and can make recommendations to improve data gathering processes. All of us need to educate ourselves about the objectives of sustainability disclosures. You will need to adopt a multidisciplinary approach, as sustainability reporting will require input from across an organization and will integrate financial and non-financial data. As accountants often have experience working outside of finance, these requirements will play to your strengths. You can direct attention to the factors that will matter and shift the all-too-common focus on short-term results at the expense of longer-term sustainability targets. Your profession is also well-versed in providing independent assurances. Going forward, accountants are likely to lead initiatives to verify the trustworthiness of sustainability disclosures and to alleviate skepticism around greenwashing. I urge you to live the ICI Dubai chapter's motto to spread knowledge and create goodwill about sustainable finance. Help us promote thoughtful dialogue across providers, investors, regulators, and other stakeholders, and please do so urgently. On the three subjects I addressed today, namely how technology is changing the business of insurance, how regulators can facilitate the adoption of useful innovations, and how everyone can work together to promote key principles of sustainable finance, I've shared some personal thoughts on how the accounting profession can help us achieve these important policy objectives for the good of all. I encourage you to take inspiration from Dubai's original name of Al Wasl. You can be the connection between industry, regulators, investors, and the public. Through your expertise at identifying and measuring results, help us to adopt sound technologies and good practices across insurance, across other financial activities, and the important new realm of sustainable finance. Let's work together to build a future for finance that is resilient, sustainable, and inclusive. Thank you for your attention today.
Thank you very much,
Mr. Christopher.
Mr. Christopher. We are really.
So I have one quick question actually with respect to, as you mentioned about regulation in DFSA. See, many people perceive that when the regulator frame out the regulations, they see them as a barrier. And most of people believe that regulators, they do not look into the practicality aspect of implementing regulations. So as you have, in your career, you have done various places, you have been regulating various regulations. What's the outset that you want to tell to people that when you frame out regulation, as you mentioned about that, you are enabler. You see what could go wrong. All we are professionals, so as the regulations are increasing in the country here, many people believe that the regulators are not looking into the practicality aspect of the law of land here when they're drafting. So what's your outlook on that? Is this something that is will remain the cause of concerns for many people, or this is not right? I mean, just a message from your side.
So it's an excellent question and a difficult one, because on the one hand, accounting is treated very much like a science. But on the other hand, there's a lot of art to valuation, and there's a lot of knowledge and expertise that's required. And we talk about level 1, 2, and 3 disclosures and so on, and having different levels of confidence in what's being done. So I think as accountants, you obviously have to start with the principles that exist and the international rules or the national rules that exist. But then, of course, you have to also draw on your expertise and knowledge when you're looking at the evaluation of assets for which there may not be good models or there may not be good market data and so on. And here's where we expect to see strong ethical standards play a role. You have to demonstrate that you have thought deeply about the issue, that you've done your best with the data that you have, and that you are doing your best to provide good insight into what an asset or a liability might ultimately be worth. But you're right, it's a challenge because it's an intersection of science and art.
Thank you. We are really grateful for your simplifying regulatory changes and their impact. And let us have a big round of applause for our chief guest. Now I would like to invite our chairman and Treasurer C.A. Jayaprakash to hand over a memento to our chief guest. Thank you very much. Now it's time to hear from our chairman. And for that chairman address, I would like to invite our dashing chairman, C. Anurag Chaturvedi, on the stage.
Thank you, Secretary C.A. Manoj Agrawal. Big round of applause to our Secretary and our Honorable Chief Guest. In the game of chess, the mature chess player knows there are 1 to 2 or 3 moves. An average player knows 2 to 3. An advanced player knows 3 to 5 moves. A grand master knows 10 to 15 moves. But in the world, as a game of chess, it does not fall true in the way of life. We ourselves can't predict even 1 or 2 moves, what folds ahead of us. Like the pandemic, it unfolded just like that. I remember when I was in China, just before onset of pandemic, I was not aware I was there and my family was calling me, look, what's happening in China, you've just come back. I didn't know, while I was there, I didn't know what's happening, what's the outside, the people is thinking about China at that point in time. I was in there. So life can unfold in many certain ways out there. Then what lies ahead? There's one single industry that helps us to safeguard against the unknown. Is what? Insurance. And important thing when we talk about insurance, an important thing about a life, who do we want to be? The important question, this is a very important question, and I want to set the tone out here today. Who we all want to be comes with a question that how do we want to secure our life, the life of our loved ones, and the business that we do or the job we do. It's all about securing the odds. And how do we do that? And who do we bank upon? Is the insurance. This industry sets a cornerstone of all the risk that we envisage in our life. And that's why this important topic, the future of insurance. But before I begin about the topic, I want to know about one single question, that how many of you we understand what the insurance is? Any question? Any answers? I will not give you the right answer, but I want to understand that how many of you understand what is the insurance? Is spreading the risk. Mitigating risk. Okay. Few more answers from this side. Transfer of the risk. Our risk with. So it's all about risk. But I'm sure that once our keynote speaker and our guest of honor and on the accounting side, when we hear, today you will change your perspective about insurance. And that is why we kept this topic, because it's very important. As we are emerging out of pandemic, we really need to understand what this product is all about, what this insurance can help in many ways to us. Honorable Chief Guest of the Day, Mr. Christopher Calabria, Chief Executive DFSA. Thank you very much, sir, for accepting our invite and gracing the occasion to be here on a short notice. And thank you, CA Rajesh Krishna Gutti, who introduced me to Honorable Chief Guest. Our keynote address, CA Vinay Surana, CEO Asia Pacific Alliance Partner. Vinay and I share very good relationship because he and I started our journey in CA together. And it is now 16 years, so after 16 years, thank you, Vinay, for accepting our invite. And he flown from Australia for this particular event. So big round of applause to our keynote address today. Our guest of honor, CA Vibha Padalkar, Managing Director and Chief Executive, HDFC Life Insurance. One thing about, I want to say, Ms. Vibha, she's addressing in one of the event virtually, so she'll be joining us shortly. I wrote to her 3 months ago to request to address our members on the very emerging topic of insurance. And guess what? I wrote to her at 4 p.m. 4:59, her reward came in, said, Anurag, I'm happy to be part of this event. And I'm talking about 4 months ahead for this particular event. So big round of applause to our leaders in our profession and industry who are so dynamic, despite of being so busy scheduled, people are flying, so taking time out to talk to you, to share their journey with all of you, to shape up your life. And I want you to be the vocal about once you go and talk to other peers. You need to understand that people from the leaders, how deep empathy they have towards our profession. Our Vice Chairman, CS Harikishan Rankawat, who is not here because he's traveling. Members, friends, invited guests, good evening and Ramadan Kareem to all of you. The today event, Future of Insurance, will focus on an executive view of internal and external trends shaping the insurance industry. Through COVID-19, the insurance industry, along with all businesses, have experienced a time of monumental challenge, as we all know that. The impacts of health emergency have expanded into far-reaching economic and societal issues. It seems clear that we emerge from the period, it will be into a new reality that will look very different than what it existed before. The eminent speakers of the day have been reflecting intensively and widely discussing across the globe the nature of heal taking place and what this means for the insured. The result is changing landscape, how the insurance businesses is done, and how they will deliver their promise affordably, covering their risk. It's very important because we all need to understand that every industry that exists for profit, they do the business, they have to make certain money out there. And one such landscape, which I was talking about, one such landscape, which I learned recently, is embedded insurance. How many of you know about embedded insurance? How many? Anybody knows about embedded insurance? No? We are paying for it. All of you are paying for this embedded insurance. When you go and buy a mobile phone, you are paying for the insurance. When you're going and buying your spectacles, you're paying for it. When you're buying, it is reaching even the shoes. When you buy the Gucci, Pradas and Louis Vuitton or kind of luxury products, it costs. But what if you're walking on the road and they slipped out there and you just torn your shoe for whatsoever reason? I mean, you paid $5,000 about it. You're going for experiences. And what if you get a cold cough last night, you book a ticket, and what if you're not able to enjoy that? So this embedded insurance is becoming a talk of the globe. My dear friend will going to share more insight about it. I'm not going to. So, as the situation evolves, it's imperative that insurance organizations continuously look to anticipate, adapt to, and manage risks, and assess the appropriateness and completeness of their strategy. While insured is grossing up to understand what complexity awaited ahead in form of insurance term, as it rightly said, read the offered document carefully before investing, right? So the topic, the theme of this event, I just invited the eminent speakers to share why a policy which is just taking KYC, understanding my risk, my health, my business portfolio, has 30-page or 60-page of terms and conditions which beyond anybody's understanding and explanation. So the insured remain the conscious about what's happening outside. So they will talk about it. So today we learn from the eminent speaker how do we address these terms and which is beyond a normal understanding. It is also clear that different industries have been affected by COVID-19 to different degrees and in different ways. Some industry has required a hard reset simply to survive on one hand, and on the other hand, the individual and businesses suffered to a great extent without having an insurance. So, insurance is a need of now. Insurance is something that can help us to confront our odds which is coming our way. So what's ahead of now? The goal must be to achieve sustainable resilience in the face of uncertainty. We have to recognize that uncertainty will continue in the future. It may be with us amongst a paramount state. Reaching the new reality is not an endpoint there, and it is therefore evolving state. And as we say that, as the journey begins, the insurance industry created a lot much opportunities for all the professionals like us. A lot much opportunities. It's only the way to reflect and see what you can contribute and take from here today to shape your future. And as we say that, sharing knowledge, creating goodwill is the motto of today. My dear friends, they're going to share how to learn before you spread the knowledge. So how to learn, what is the science of learning itself, and how they progress their career throughout their term and throughout their profession, their experience. Now, just before I hand over the baton again to our secretary, I would like to encourage and thank everybody to attend the last event which we done, and thank you very much for the love that you passed on to us by coming in a huge number. So a big round of applause to all of you for coming in number. We had 750 members attended our last event. And it's time, as we say that it's the holy month of Ramadan and we have to celebrate iftar. We have to have this event. But this time we are not hosting iftar for you. We wanted to come to your house, celebrate the iftar, not with only you, with your family, with your kids, with your loved ones. So the entire managing committee is working very hard to bring this iftar celebration to your home, to your loved ones during this month. So big round of applause to managing committee to work hard on this, and I look forward for your participation as well. Thank you. We are going to have now a study tour. We have completed the study tour formalities, and we'll be going 45 members troop to Albania. Thanks to Amit Khetan, who organized this entire event. Give a big round of applause to him. The next event after Iftar, after Albania tour, is going to be on 7th May. And 7th May event is going to be again very important for all of you to understand, because I see the hope in everybody's eyes. I see that you want us to create something for you. I want to give that response, because your hope is our driver. Your hope is our commitment that we need to deliver. So we are coming with an event where you'll understand from the speakers, learned speakers who have extraordinary career ahead of them, how to build an unicorn. So they will talk about what they have done in their life, what they learned, and how they, from an employment, they created their empire. Not just only across India, but globally. How they use technology to change the future, for not only for them, for the generations ahead. How they have become the social worker to change the life of millions of the people. So that event is going to be 7th, and it will be under the title of Preparation for the Unicorn with Espresso Talks. So looking forward to welcome each one of you on the upcoming event, and we are coming your way to celebrate Iftar with you. That's it from me. Thank you very much for listening to me. Over to you, Secretary Sri Manush Agrawal ji.
Thank you, Chairman Sri Anurag Chaturvedi, for your kind words and letting us know about the forthcoming event and plan of action. And during the chairman address, you have addressed some key secrets, hidden secrets of insurance, on which our speakers are going to enlighten us. As we all know, insurance plays a crucial role in the sustainable growth of an economy. It turns accumulated capital into productive investments. Insurance enables to mitigate losses, increase financial stability, and promote trade and commerce activities, which resulting in economic growth and development. As the world economy evolves, so does insurance. And to share with us the evolving role of insurance in today's world, we have with us our keynote speaker, our own fraternity member, CA Vinay Surana. To introduce our keynote speaker of the day, I would like to invite our ExCom member, Sri Rishi Chawla, on the stage.
Thank you, Secretary Saab, for your kind introduction. Insurance. So when I heard of this this session which is happening, I just reminded myself, like, insurance is just another member in the family. You might not see it, but on the bad day, it comes out from all the corners. Like our chairman Saab said, embedded insurance comes from all life, from the car and things like that. So the importance is so great that I realized this in one of the accident I met with my car a few days back. And so I got bumped at the back. So when I got bumped, I went out, and first thing I checked is not the car. I checked the person who bumped, is she okay or not? Because I'm not worried. The insurance is covering us. So that's the importance of insurance. In order to discuss more on this line, we have a very learned speaker, CA Vinay Surana, who is going to talk to us about securing your future with care and compassion, evolving role of insurance in today's world. CA Vinay is a regional CEO of Asia Pacific for Alliance Partners since 2020, and he's looking after 11 markets across Asia and Australasia. He has over 20 years of experience in insurance industry. His key to success is basically building a scalable and profitable business through effective transformation and change management. What caught my attention the most is that he launched many startup businesses across Asia and North America in insurance and financial services industry. So great with that. Prior to Allianz, Vinay was Senior VP with Asia Pacific, had individual personal insurance with AIG for Sydney and Tokyo. He started his career with Ernst & Young in India.
He also qualified his CA way back in 2003. Actually, it's the same year when I qualified, so I'm sure you must be sitting in one of the rooms in the corner. He also completed his 1-year executive leadership diploma from National University of Singapore. So with that, I'd like to welcome CS Vinay Surana to join me on the stage with big round of applause, please. Stage is all yours.
Thank you so much.
Vinay, 1 second.
Hello. Good afternoon. Good afternoon, everyone. It's indeed an honor and pleasure to be in this august company of fellow chartered accountants and other financial professionals who have come to spend their Saturday afternoon with all of us to talk about insurance. Insurance, it indeed is a very interesting subject, and what I intend to do over the next 45 minutes is to share some insights on insurance industry, its evolution, a bit of a history, and then where the industry is right now, and what should we be looking forward to when we think about insurance and the trends that are emerging in that space. I would try and keep my presentation interesting with some fun facts from time to time, so that at least people are not sleeping and yawning in the audience. And believe me, I will be asking some trick questions, so if you think you can escape it, probably you need to be prepared. So let me start with one simple question. What does the word insurance mean? So I think when Anurag was giving the chairman's address, he talked about insurance and what is the purpose of insurance. But let me ask you, this is a fun fact, by the way, so you can be creative in your thinking. So my question is, what does the word insurance originally mean? Fantastic. I'm sure you got the backdoor view of my slides, I guess, but absolutely right. The word insurance originally meant engagement to marry. It comes from a French word, insurer, which originally meant engagement to marry, and then it evolved during the period to become assurance, and then the word insurance as we know today. So this is where insurance started, right? So it's very beautiful origins of insurance. It is always about marriage, making the connection, as Christopher mentioned. So as we all know, today's world, the world we live in today is full of uncertainty. We all are experiencing the geopolitical crisis in Europe, in Middle East, in different parts of the world. Pandemic, as we all know, right? It is something that has disrupted large part of our lives and the life as we know. Natural disasters, Christopher talked about climate change. Climate change is driving not only the frequency of natural disasters to be higher, but also the severity of the disaster itself. Cyber risk. We all live digital lives these days, and we are always worried that somebody is watching us. Somebody is watching what we are doing, right? So it is an emerging risk that I guess probably will become a risk bigger than any of these risks that I mentioned. And then, as the world is unpredictable and ever-changing, there are a lot of emerging risks that are coming up from day to day. So if the world is full of uncertainty, how do we bring certainty in people's life? For commerce to progress, for life to go on, we need to provide certainty, because without certainty, we can't plan the future. And this is in where comes the purpose of insurance. Somebody talked about transfer of risk. Somebody mentioned pooling of risk. The purpose of insurance is to secure the future. and to provide peace of mind. This is what is the purpose of insurance. And this industry, for more than 3,500 years that the industry in one way, shape or form that it has been around, this has been the sole purpose why it has survived this long, even though the world has gone through so much of transformation. Because there is no substitute to actually providing a service that helps secure the future, plan the future, and provide peace of mind. Another fun fact. So fun fact number 2, which company pays more for their employee health insurance than it pays for its core product? Any takers for that in the room? Sorry? Good try, but you all would probably know this name of this company, Starbucks. Starbucks pays more for their employee health insurance than they spend on buying coffee, the very product that they sell. Right? Even during the time of restructuring, Howard Schultz, who's the CEO, he refused to cut employee benefit and employee health insurance, even though he was restructuring the company. Right? So this shows, right, the importance, where the leadership places the importance in terms of protecting the life and livelihoods of their employees, right? And this is where the money goes. So let us reflect collectively a little bit on history of insurance. I talked about 3,500-year history. From written records that are available, the first written record shows us that it was in 18th century BC, during the rule of King Hammurabi, that there was something called King Hammurabi's Code, where everybody in the kingdom was provided some sort of protection in case of default on their commitment with respect to making good on a transaction. Back in the day, a lot of these things was done through a barter system, as you can appreciate, right? And the whole idea was that if the individual who was supposed to execute a transaction either died or actually faced a natural calamity or a challenge, then the government, or not the government, but the kingdom itself would actually help pay or execute on the commitment. Over the course of next 1,000 years, insurance evolved, and what we saw happening is, going from an individual, we started seeing evolution of group products in the marketplace. So it's quite interesting. This medieval guild groups coverage was basically designed as a cover that was provided to encourage people move from farming into other trades, because farming was the only profession that people were engaged back in the day. To encourage people to move from farming to other trade, what was provided was, there was some sort of an underlying commitment that was made, that again, same thing, same concept. If there was a famine, if there was a natural calamity, if there was a loss of life, then there was coverage that was provided to the family. Modern insurance, as we know today, the first contract was executed in 1347 in Genoa, Italy. This was the first time that insurance was not embedded as part of any government policy or a kingdom's edict. It was actually an independent contract that was executed. So this is where we trace the first roots of modern day insurance from a contract creation perspective. As we all know, as in the 15th and 16th century, as the Europeans started trying to explore the world all over, and as trade bloomed, right, the need for marine insurance grew. And this is where the start of Lloyd's of London happens. This is where we actually started seeing the rise of modern day insurance. Obviously, in 17th century, early 17th century, London experienced two large calamities. One was the plague, the Black Plague, and then we had the London fire. And this is what gave rise to the fire insurance. It was in 17th century that fire insurance was actually started in UK, and then it actually crossed over to the English Channel and went to France and Netherlands, and that's where it started. And then as the time progressed, it actually moved across Atlantic to United States. Life insurance mortality rates and mortality tables for the first time were created in actually 17th century. Insurance actually transitioned from across Atlantic from Europe into US. And this is where it really blossomed. Benjamin Franklin actually started the first fire insurance company in the United States in the early 18th century. And post that, for over 100 years, insurance really blossomed in the United States, and a number of insurance companies came into the market. But during the large Chicago fire in 1890s, followed by the San Francisco earthquake in 1906, resulted in almost 50% of all companies going bankrupt in US. This is where what we call it as modern day insurance came into place, which was highly regulated and focused through making sure that the solvency of the insurance companies was secured so that the promise that they make to the policyholders actually is made true. So let's talk a little bit about the insurance market today. We all know insurance is broadly categorized into three core categories: general insurance, your home, motor insurance that we buy; life insurance, right? And Vibha is going to cover some of these things later, which is about term life insurance, but also some retirement products and health insurance. Any guess in the room, what is the size of the insurance industry today? Anybody? A wild guess. What do you think is the size of the insurance industry in terms of annual premium? Sorry? Okay, I hear 100 billion. Okay, any more? Okay, so general insurance in 2021 globally was $1.8 trillion in size, and that's just general insurance. You can see 50% of that was in Americas, and the remaining 50% was almost split evenly between Europe, Middle East, Africa, and Asia Pacific. Life insurance is $2.5 trillion in size. Here you can see the share of Asia Pacific is a lot larger because of the number of people that live in Asia Pacific. US accounts still for almost a third of the total life insurance market. And then you think about health insurance, that's another $1.7 trillion in size. And here, United States has the lion's share because of the high healthcare cost in US. You see 2/3 of the total health insurance premium is written in the United States. This is one of the reasons why the largest insurance company by premium in the world is actually a health insurer who is a monoline insurer, that is United Healthcare. Because health insurance market is very big in US. So altogether, insurance industry is a $6 trillion annual premium industry. Just to put it in perspective, 2021 global GDP was 94 trillion. Insurance accounted for 6% of the total GDP on a direct basis. Now, if you look at the indirect impact of insurance, right, in terms of employment and everything else, we are talking about an industry that contributes anywhere between 7 to 9% of global GDP. This is how important and relevant insurance industry is globally. Now, this number is likely to grow to 7 trillion this year. So, not only this is a large industry, it is also an industry that is growing at a CAGR of close to 4% a year. So imagine, right, something which is 6, 7, 8% of GDP growing at 4%. It is one of the largest driver of GDP growth. Now let me share a little bit about the top 3 insurance markets in the world, right? I don't think there are any surprises. The largest insurance market in the world is United States. United States accounts for 2.5 trillion of the 6 trillion in terms of premium globally. The second largest market is a distant second, but not small. It's China, 700 billion and growing at double-digit CAGR. In fact, if you take China out of the global growth rate, the entire growth rate of the insurance market comes down by a third. This is how impactful the growth in China is when it comes to insurance. And then Japan. Japan used to be the second largest insurance market, but obviously China, in last 5 to 10 years, the insurance market there has grown significantly, but still, Japan with a population of 120 million people still accounts for the third largest insurance market, close to 400 billion. So the message I want you to take from this, what we sell in insurance is a promise, right? It is probably the only industry in the world where you do not sell a product that anybody can touch, feel, smell or taste. It is a promise to help you at the time of need. And it is that promise that provides certainty for the commerce to go on, for us to live our life with confidence. And this is why insurance is so important. Another fun fact. So does anyone know how much did Julia Roberts insure her smile for? She was at some point in top 15 most beautiful females on the face of this planet. What was the value that she insured her smile for? You said 50? 40? Not too far. She insured her smile for $30 million. Thank goodness the claim the insurer never had to pay the claim. But you can imagine, by the way, you will find that, big sports, well-known sports players like Ronaldo, I hear that he has insured his lower half of his body for close to $100 million. Just so that you know, because obviously, if he can't run, if he can't walk, then he's worth nothing. So let me talk a little bit about the traditional value proposition. So when you think of insurance, what has been the core mainstay of the industry? Core mainstay of the industry has been around remediation. What do I mean by remediation? When you buy an insurance product, the insurer gives you or makes a promise that if you ever suffer a loss, we will make you good on that loss. We will remediate that loss, right? In terms of financial means. I can't bring back a loved one, but at least I can give you some financial compensation that can help ease your pain. If your house burns down, we'll make sure that you can rebuild your house. If you suffer in your business, we can help you make up the loss of profit. So the traditional value proposition of insurance has always been grounded on remediation. And this is why if you ask an insurer what is your value proposition, they will always tell you, we pay claims fairly and we pay claims quickly. I think that is not good enough. To me, it's a chef telling me, if you come to my restaurant, I always use fresh ingredients to cook my food. Well, if you don't use fresh ingredients, then you should not be in the business of cooking. So for me, remediation is table stakes. This is not value proposition. If you cannot pay claims fairly and if you cannot pay claims on time, then you should not be in the insurance business. I'm sure, Christopher, you will agree with that as a regulator, that obviously in terms of protecting the interests of a policyholder, you want to make sure that the insurance companies pay the claims fairly and quickly. And this is why there is a lot of emphasis on making sure that the solvency of the insurance companies are well maintained, because we are making promises for risks that can eventuate in the next 100 years or 70 years. And you want to make sure as a regulator that the insurance company is there when actually the time comes to pay the claim. But it is also a place, if you think of it, it is a place where you have the lowest customer affinity. And why? What do I mean by that? When you have had a loss, right, it is a moment of distress, right? Onset of a disease, your home burned down, you had a car accident, you lost a loved one. It doesn't matter how good a job I do as an insurer in terms of paying the claim quickly, making it hassle-free, right? You are just not in the right frame of mind, right? So even if I'm doing a great service, it is very hard to build customer affinity. This is why I say insurance industry, which is so big, is probably ripe for disruption. And the only reason why an Amazon or Google has not actually come in and disrupted the insurance industry so far is because the margins are too low. We as an industry don't make enough profit, so we are below their threshold of return on capital. This is why they are not interested in getting into insurance in a holistic manner. They are disrupting on the edges, but they are not playing holistically as a in the main space. And the other reason is we are a capital-intensive industry. You need a lot of capital, a lot of regulation, and tech has no interest in capital-intensive and regulation and highly regulated business. But if you look from a customer affinity perspective, this is an industry that should get disrupted. The first thing, because I will tell you, and we will talk about it later, when you go out and do survey of 100 individuals in the marketplace and ask them about the perception of insurance, you will see generally the perception around insurance is quite negative. Second is assistance. So as the value propositions has evolved, and with the advent of technology and ability to provide service at a micro level, what we are seeing is the move from remediation to assistance. What do I mean by that? Assistance is when you can get a service from your insurer without actually having to make a claim. For example, if you buy a motor insurance from your general insurer, they might provide you roadside assistance with it for free, or they will embed the cost of that into your policy. So if your car breaks down, no accident, your car just broke down, you can call, you get emergency assistance from your insurer. This is where assistance comes in. And I think assistance is a place where you can create greater affinity with the customer, because now you have an opportunity to actually provide some tangible value to the customer outside of a scenario where they have had a loss. And also in terms of number of usage, and these are secrets of insurance industry, but it's worth sharing. The whole insurance model works on frequency and severity. Frequency is number of people who are actually going to make a claim as a percentage of total pool of customers you have. Simple math, right? And severity is the average size of the claim. So one of the most highest frequency product is motor, right? In our insurance parlance, and Vibha can very much relate to it, we talk about the frequency of claim, and we will say motor has a frequency of close to 15%. So 15 out of 100 customers make a claim. So even if we do a great job, only 15 out of the 100 customers ever get to experience the product we sell. The other 85 got a piece of paper, as Anurag said, too complex, I don't understand what it is, I throw it in my drawer, it's a necessary evil, right? So what is the value, why should I spend money? But when you actually start moving up the value chain on assistance, you will see that the usage rate doubles. So now, when you bought your motor insurance policy, you got roadside assistance with it, so now you actually have a chance of using it, and that creates positive association with the brand, with the customer. Now, what is nirvana in my term, in terms of insurance value proposition? Is prevention. Prevention is where you can actually prevent a claim from happening. Today, why I have shown it on a pyramid is a lot of companies, insurance companies are still investing a lot of money on remediation. We talk about technology, how technology is helping pay the claims quickly, how it is making payment of claims painful, but a lot of energy is going on remediation. Now, companies like Allianz Partners are world leaders in terms of assistance, where what we are doing is we provide all types of assistance services that can be bundled with an insurance product as part of our value proposition. But where the real value sits is in prevention. Imagine a world if, as an insurer, if you put money behind actually providing preventive services. For example, and Christopher mentioned about drones, right? If you have home insurance, and I actually did it when I was in Japan working with AIG. If you know Japan a little bit, Japan has 4 major islands, it has a lot of other islands. Hokkaido, which is the northernmost island, gets snow 6 months a year. So imagine trying to provide home insurance in a geography where there is snow sitting on the roofs of the houses for 6 months in a year. What happens? When the snow melts, the water sits on the roof, it seeps through your roof, and you have a claim, right? So homes which were more than 20 years old, which were not built with reinforced concrete, became an uninsurable risk in Hokkaido. Insurers do not want to underwrite the risk because the claims are too high. Obviously, you don't make money. Now, as a regulator, if for an insurance company, we'll say, well, this is not a desirable risk, so we should price ourselves out so that we don't offer insurance. As a regulator, you want inclusive coverage. You want to make sure that the customers living in Hokkaido has some sort of a home insurance protection. One of the solutions, this is an example of prevention that I piloted in my previous company, was we started using drones to inspect the roofs of these Japanese homeowners before the start of fall season. What happens is, these homes are built well, and they're designed to withstand that kind of snow sitting there on their roof for 6 months. But then they have a drainage system through which the water needs to go through when it melts. Unfortunately, during the autumn season, a lot of dry leaves falls on the roof, blocks the drain. Now the water has nowhere to go, and guess what? When the water melts, it actually comes through the roof. So what we did as a pilot, and this is, by the way, 2015, so this was like 7 years back, technology was still evolving, was actually use drones on a pilot basis to inspect the homes of the customers just before the start of fall season to see if the drainage system was good. Was it covered with dried leaves? Right? Using a drone, click some pictures, and then the homeowner was, him or her was standing next to you. They could see visually on an iPad what the condition of the roof was, what the condition of the drain was, and if there was a problem, you can fix it before the snow season starts. This made all of a sudden a part or a segment of the risk which was not insurable, all of a sudden it is actually becomes an insurable risk. This is a great example of an insurance company that is spending money because it costs you to do all those inspections. You provide it for free to your policyholder, but the benefit you get is you get less claims. So in what you understand on a P&L, from a P&L geography perspective, my cost shifted from loss ratio, which is part of my P&L, to my expense ratio. But in doing that, I have created positive change in the eyes of the customer. I have made a positive societal impact, and all of a sudden, all those customers who thought they are no longer insurable, or their homes are no longer insurable, all of a sudden become insurable. This is a great example of technology or prevention being used to drive inclusion. So I touched on some of the topics. I will use a word cloud to show you. This is what perception of insurance is today. We did a bit of a survey with customers and said, describe in one word, what do you think about insurance? Trust deficit, necessary evil, right? I have no choice, I have to buy insurance because I can't drive my car if I don't have motor insurance. Too complex. They always find a way to not pay the claim. They have a fine print. Read clause 18B on page 32. I have an exclusion. So this is why you're not going to get your claim paid. So this is what the perception of insurance is. And just to remind you all, this is a $6 trillion industry, right? Where I am not selling a tangible product, but I'm selling a promise. Still, this is how customer feels about what I'm doing. So if this is the case, this is why I fundamentally believe this is an industry that is ripe for disruption. This is an industry that is absolutely ripe for disruption. So what should be the future service model? The future service model for insurance needs to be focused on prevention. Invest in preventing bad things from happening. Help customers with their wellness rather than trying to cut down on the health claims. If people live healthy lives and you incentivize them on wearables and provide them good insights on living a healthy life, guess what? Your health claims will be lower, or your health claims cost will be lower. Right? Provide drivers, and you know, Christopher, you touched about some of the examples. Provide drivers real-time insight on the quality of their driving. Hard braking, cornering, sudden, acceleration. Give them a score every time they drive. Engage them on the platform, make them a better driver. You will make roads safer for your kids. You will make their lives better. And guess what? In doing so, you will have less claims. So the future of insurance is focused on prevention. Then combine that prevention with service. Even if you prevent, there will still be some incidents where they will need support. So provide them the support. This is where insurance industry needs to focus, where the money is going. And technology can be a big enabler there, and I'll talk about it later. And then obviously, simple and quick remediation. We still have to pay claims. Paying claims is our bread and butter. But this should not be the only purpose why we exist. And this is where we can drive significant customer affinity. Those insurers who can really drive prevention will corner the market of the future. And digital technologies are there today that can help us use individual personalization to engage either an existing customer or a potential target. Now, if we do this, as I talked about, this was the perception of insurance. If we actually switch to the future service model, this is how the perception changes. Everything that was negative about insurance can become positive. We talked about trust deficit. Actually, you will generate trust surplus. And these are, again, real comments. So we went to the same set of people that we interviewed or we surveyed and told them or gave them some hypothetical example of embedded insurance and said, if this was happening, what will be your perception? Describe in one word. Companion in need. Can you imagine? Companion in need, from necessary evil. Transparent. Easy to deal with. Embedded personalized offer. Protection focused rather than exclusion focused. So this is an industry that cares for me as an individual. But in order to do that, we need to fundamentally challenge the service model that the industry has been built upon. Another fun fact, time for a fun fact. Who's ready for it? So which insurance company underwrites Jackie Chan's production? So as most of you would know, right, most of the films as they are produced are insured. Allianz globally is one of the largest underwriter of film production. In fact, whenever Oscars are happening the day before and after, we get an internal email how many of our insurers are actually nominated for the Academy Awards. So who do you think insures Jackie Chan's production? Okay. No insurance company would insure his production because he does not play by the rules. He does his own stunts, right? So it is a high-risk game. In fact, he used to get insured by Lloyd's at some point in time, but the restrictions were so much that Jackie Chan would basically say, I can't make a film if all those restrictions exist. So he actually, all his production are without any insurance. Moving on to what I will cover in next 15 minutes is two key topics. One is some top global mega trends, and Christopher did cover a few of them in his opening remarks, so bear with me if you find them repetitive here a little bit. And I will also talk about specifically some trends that are impacting insurance industry in particular. By no means these are all inclusive. This is just a sample. So please keep in mind, this is not all inclusive, this is not end all, right? But these are trends which are clearly, I hope most of you in the room will be able to relate to. Digital disruption, I think we can see digital disruption impacting every element of our life on a daily basis. And again, digital disruption, a lot of us associate digital disruption to pandemic, but digital disruption was happening even before pandemic. AI, IoT, machine learning, these things have already started. I gave you an example of drones, which was cognitive intelligence and AI-enabled vision, right? All of these things had already started gaining ground even before pandemic. But what pandemic did was accelerate that trend. That last push that was needed to get us across the line, that is what pandemic provided. So today, if you look at it, our ability to engage our customers, our agents, our partners in a virtual world is limitless. I myself, I'm a good pandemic baby because I started in my current role on 23rd March 2020, the day the lockdowns were happening in Australia. For first 18 months, I did not meet a single member of my team. About 5,000 people were part of my team in Asia Pacific. I did not meet in person a single person in my team till November of 2021. Had somebody told me this before I joined, I would have never joined or switched jobs, right? But having done that, I can tell you, technology has been such a great enabler. Things that I thought I could not do, things that I had to give up or make choices on, I no longer have to do it because I can do it virtually. So digital disruption is the name of the game. This is a trend that is impacting, I would say, most elements of our life today. I'll just share some facts with you. The new tech market, so this is everything around IoT, AI. This new tech market, the value of the new tech market was close to $350 billion in 2018. This market is likely to grow to, hold your breath, $3.2 trillion by 2025. So it's saying a market that is going to grow tenfolds in a space of 7 years. This is digital disruption in real life in terms of numbers. According to McKinsey, the rate at which companies introduce products and services, right, during the pandemic accelerated significantly to the extent that they estimate that in North America, the rate of acceleration has been plus 6 years. So things that would have taken 6 years have already happened during pandemic. This same rate in Europe was 7 years, and in Asia, it was 10 years. So digital disruption is accelerating the pace of change, it is accelerating the pace of transformation, and it is no longer a good to have. It is no longer a differentiator. Digital is the new utility. We cannot do business without, we cannot work without power, right? Similarly, today you cannot work without digital. So it is no longer a point of differentiation, it is absolutely a utility, and we need to think about it from that sense. And insurance industry as a whole is quite notorious in terms of keeping up. I always say we are always chasing our tail when it comes to digital. Challenge being, structurally insurance companies are very complex, they're significantly regulated, and they carry a large amount of technology debt. And because of that, it is very hard to keep up or lead the change. We are largely following the change as an industry. And now this is where the opportunities with InsurTech and unicorns are emerging, where we can partner with them to drive this change and become a driver of change, right? Rather than being driven by the change. Second global trend, again, Christopher, you touched on it. I call it decarbonization driven by climate crisis. Just to give you some numbers, because we are all chartered accountants, we love to look at world through the numbers. And Christopher, I think you made a very good point when you said, right, if you can't measure it, right, you cannot actually, for me, if whatever cannot be measured does not exist. You can only change something. You can only look at the effectiveness of something if you can measure it. So from a number perspective, what is the impact of climate change? And a lot of these topics were covered by Christopher. Global economy will lose around 11% of GDP. So if you remember, I said 2021 global GDP was close to $94 trillion. If we can keep to the Paris Accord, which was to limit the temperature increase to 2 degrees, which now obviously we are pushing for 1 and 1.5. But we are going the other way around, by the way, if you measure what has happened since the Paris Accord. If we could limit the global warming to 2 degrees, the world GDP is likely to shrink by 11%. This is real. We are talking about losing the 4th largest economy in the world in terms of GDP size. This is what is the real impact of climate crisis if we do not address it today. So the ambition at COP26 of getting it to 1.5 degrees is real, because 2 degrees is not good enough. From an insurance perspective, when you look at the climate crisis, from the year 2017 to 2020, 4 years, the total insured losses, right, from natural disasters was $350 billion. Big number, right? Big number. But now when I quote you the number that was in first half of 2021, you will realize how fast the world is changing. First 6 months of 2021, you know what the losses were, insured losses were from natural disasters in 6 months? $100 billion. So 350 in 4 years, 100 billion in 6 months. We can all do the math. So climate crisis, to what Christopher was saying, it is no longer an issue which you can discuss at a dinner table because it's fashionable to talk about sustainability, because it is, it's good optics if you are, an environmentally conscious organization. This, if we do not actually take immediate action when it comes in terms of climate crisis and focus on decarbonization, it would actually challenge the fundamental way of how we live. Today, if we actually, at this point, the global annual investment in green economy is estimated to be $1 trillion in 2023 itself. This is committed amount that has already been committed, which will account for 0.7% of the global GDP. It will create 9 million new jobs and will add 1.1 points of growth to the global GDP. But if you look at, to achieve to that 1.5 degree global warming ambition, to keep it below 1.5 degree, we need to spend globally $131 trillion between now and 2050. So that's spending $131 trillion. If you do the math, it's about $3 trillion a year is what we need to spend to limit the temperature increase to no more than 1.5 degrees. This is more than 1.5 times almost of the global GDP. So this challenge is real, and we need to tackle it. We need to, and it is very easy to say, this is something distant, let somebody else take care of it. All of us, 7 billion of us who live on the face of this planet, need to become sustainability aware. Think twice before you decide to use a paper cup. Think twice when you decide or choose not to segregate your waste. I lived in Japan for 5 years. I think probably the only country that is, very highly sustainability aware. I'll give you a good example. If you ever go to Thailand, Hong Kong, Singapore during summer, or even in Dubai, right? When you are in summer, right? It is burning hot. It is 50 degrees outside, right? Or it is 40 degrees in Singapore, 80% humidity. But inside the office buildings, people are wearing jumpers and jackets because they keep the thermostat so low. Is it good for the health of the individuals? No. Because of the change in the temperature when you move in and out. Is it good for the environment? The answer is no. Now I'll give you a real example because I lived in Tokyo for 5 years. In Japan, you need to, by law in Tokyo, keep your thermostat at 24 degrees. You can't lower your thermostat in your office building lower than 24 degrees. Now 24 degrees, it's okay, right? It gets pretty warm in Tokyo as well. It gets to 40 degrees. 24 degrees is fine. But if you are in a glass building and sun is beating down on you, I had a corner office in a glass building, even though the overall temperature on the floor is 24 degrees, the temperature in your office room or in your cabin could be 30 degrees. But you're not allowed to lower the thermostat. Doesn't matter if you're a CEO of a company, it doesn't matter. That is the law. So sustainability, right? It might cause you a bit of inconvenience. It might require you to give up a little bit of your convenience that you are used to, right? But for a long-term future of the planet, it is very important that we, all of us, take a pledge to become the sustainability ambassadors and not expect our company or or an NGO or a government to do something about it. We need to drive the change. It is us who is change. And if we don't do it, it will fundamentally challenge the survival and the life that we know and that we live today. Next mega trend is about divergence in economic power. So there was growing disparity after global financial crisis, and again, Christopher, you were there as part of the New York Fed. I was with AIG. I've seen the GFC from very close quarter. As I say, I had a bullet that grazed my ear, right, but didn't hit me. Right. But the point is, since GFC, even though the global economy has recovered as a whole, what we have seen is the growing disparity. The growth has not been equal and even. Rich countries, richer individuals have actually accumulated a lot more wealth than majority of the population. And this is what is causing the large-scale social challenges that we are seeing all over the world. We have seen the Arab rising in the Middle East. That was largely driven by the sense of discontent. When you lose hope about your future and the future of your kids, that is when you pick up arms, because you say, well, I have nothing else left, right? I need to do something about it because the government or the system in which I am supposed to be putting my faith in is not doing enough. So this divergence is a big challenge. And this is why today everybody is focused on inclusion and how do we bring about inclusive growth. Unfortunately, pandemic has made the trend even worse. And what is interesting is even within countries, within the territorial boundaries of the country, we have seen growing disparity in the economic recovery post-pandemic. One region recovering a lot faster than another region within the country, and that is driving further discontent. So this is something that has to be addressed holistically, obviously by the governments, but also corporates have a role to play. Demographic and social change. Obviously, we talk about the aging population, right? Just to share a number with you, the share of population, share of people who are more than 65 years as part of total population was 6% of the total global population in 1990. This number has now grown to 9% in 2020. And it is likely to go to 15% of the total population by 2050. That means 1 in 6 individuals would be more than 65 years age by the time we get to in next 30 years. Imagine the amount of pressure it will put on healthcare, on retirement, right? And this is where, as much as it is something that the government has to systematically address, we need to also address that as industry. What kind of solutions can we bring as an insurance industry to the marketplace that can help solve the problem of retirement gap? Last but not least, here is labor shortages. Everybody has heard about Great Resignation, right? In terms of it is coming, it is already here. I don't think it is coming, it is very much here in terms of what I see. Having a large team, I see how recruitment is very hard, how retention is very hard today. And obviously with pandemic, I think the preference of what to expect from your life has changed. I think we have a once in a generation opportunity to redefine what does work-life mean for all of us. And I think the entire industry and all of us have a role to play in this, whether it's flex at work, whether we allow more flexibility to the female participants in the workforce in terms of how and where they can work, what times they can work. So if we do not provide this, again, it used to be a point of differentiation. What I see today, it is now becoming a necessity. If as an organization you don't offer flex at work, believe me, retention is very hard. People are willing to actually give up 10 to 15% of their compensation for a better work-life balance, right? So what is happening today is that we are seeing a big trend around people walking away from a corporate 9 to 5 job or 9 to 9 job, depending on which industry you are in. Certainly in accounting, we would say it's 9 to 9, maybe even 9 to 12 midnight. But clearly we are seeing people move away from saying, I do not want to live a life of a machine. What I want to live a life is a life of fulfillment. And for that, I'm willing to trade off. I'm willing to move to a smaller place, to a smaller role, or do something of my own. And what that is creating systematic labor shortages. In fact, there was a survey that was done by Microsoft. And in Australia, when they surveyed, 40% of the employees who are currently in the workforce said they will change their job in next 1 year. 40%, not 4%, not 14, 40%. And this same number was 49% in case of Singapore. So 1 in 2 individual is going to change a job in next 12 months in Singapore. Can you imagine the impact it will have if you don't address it? There are 20 million less people in the workforce just in the OECD countries between when pandemic started and now. These are real numbers that we can measure, and the impact that it has on the industry, on our ability to provide the services to our customers and partners. Now moving on to key trends that are impacting insurance. Autonomous mobility and green mobility. Now, we have all talked about, I talked a lot about sustainability. Green mobility is real. Just to give you a number so that at least you have it, the EV market, the global EV market in 2020 was valued at 171 billion in terms of size. This number is going to grow to 700 billion by 2025. So the electric vehicle market is going to grow 3-folds in next 4 years. This is real. This is again no longer a hobby. People have been talking about electric vehicles. If you talk to any OEM, they've been talking about electric vehicles for 10 years now. But now it is no longer a good to have, it is a must have. If you do not have an electric vehicle offering, you cannot grow. In fact, a lot of OEMs, because we work with a lot of OEMs globally on technology, they have actually stopped investing in research and development in the ICE technology, internal combustion engine technology, forever. They're saying we are not going to put $1 of R&D into ICE because this is not the future. All money is going in EV. And then the second element is autonomous mobility. And Christopher mentioned about pay as you drive, pay how much you drive. But I think autonomous mobility has far-reaching consequences for the insurance industry. Because today, motor insurance is 50% of the total non-life or general insurance market premium globally. So if you remember the number, 1.8 trillion, $900 billion of premium is actually motor insurance. But if autonomous mobility really becomes real, the risk will shift from a driver and a vehicle to the manufacturer and the infrastructure provider. Because you are no longer driving the car. Today, when you buy a motor insurance, what are you insuring? You are insuring the vehicle for driver's fault, correct? Ultimately, a driver, whether you or a third-party driver, makes a mistake because of which you are in an accident. But in a world of full autonomous mobility, and in the automotive industry, they call it L5 level of automation. As a driver or a passenger, you can sit and watch a movie, read a newspaper, actually turn your back towards the windshield and talk to somebody the car is driving. So the fundamental nature of the risk will change. So now the risk is if the manufacturer has a default in the car, like the famous Tesla crash that happened last year, where the driver died when he was on an autopilot, the risk will shift from an individual to the companies, so to the manufacturer, so it will become a liability insurance. And it will also shift to the infrastructure providers, because at the end of the day, autonomous mobility will be run on 5G, potentially 6 or 7G connectivity platforms. So if there is a disruption all of a sudden and there is no mobile coverage for an hour, can you imagine? And the car's running all on autonomous, what will happen? What chaos will ensue? So the liability will shift to those providers, those companies, rather than individuals. So this is a fundamental challenge for an insurance industry when you think about trends that are likely to impact or are already impacting. Second is ownership to usage. There is a growing shift from moving away from buying and owning assets. Especially if you talk to Gen Y and Gen Zs, right? They don't believe in buying cars or buying assets. They only believe in experience. I have a mobility need to go from point A to point B. Do I really need to own a vehicle for it? The answer is no. I can use a suite of different mobility solutions, whether it's I start my day, I get out of the house, I jump on an e-scooter. Then I get to a public transport, I jump into a bus or a train. On the other side, when I get down, I get an Uber and I get to my destination. This is the future of mobility. This is here today. So in that environment, if people stop owning asset, that has a fundamental impact on insurance. If you don't own something, then you don't buy insurance to protect it. Look at Airbnb, right? Ride sharing, home sharing. So the whole concept of, or the transfer from ownership to usage has significant implication for insurance industry as a whole. Next is health and well-being. Again, I don't think this is a new topic for anybody, but health and well-being, it has become, was always fundamental, but now it has become a lot more central in a post-pandemic environment. Today, you know, the awareness, the level of awareness with respect to well-being, whether it's physical well-being or mental well-being, is exponentially higher than what it was pre-pandemic. People care a lot about their physical well-being, their mental well-being, because being healthy is probably the most important thing you want to have. Because if there is no health, then there is no life. Just to again share some numbers with you, global wellness economy contributes about $4.5 trillion. This is the size of global wellness economy. And if you compare that to what is the global health expenditure in the same year, is 8 trillion. So the global wellness economy, which you thought would be niche, right? How could it be that big? But global wellness economy, and these are not my numbers, these are UN numbers, actually is almost half the size of total health market or health spend globally. And this number is likely to grow to 8 trillion by year 2030. So if somebody wants to think about future, where to go and where you should be focused on, wellness is where you need to focus on. Again, going back to the value proposition, it is all about prevention. If you are healthy, right, then there is no need for you to make a claim. If you don't make a claim, everybody is a winner. So how do you actually spend in and invest in wellness rather than spending money on reducing your healthcare cost? And then moving on to the next topic, which is ESG. Again, we've touched a little bit on it, but I think ESG, as Christopher also mentioned, it is now becoming a strategic priority for customers, for employees, for shareholders, and as I say, dare I say, for society as a whole. As an industry participant, whether you are an insurer or you're in any industry, you will need a social license to operate. And you will not get a social license if you are not focused on ESG. So ESG has now become a key focus for everyone. Social license. Social license, what I mean by social license is we need, as an industry, need to actually making sure that we meet the community expectation from us. And by community expectation, it means how do we actually protect? A, we should be ethical in our behavior. We do the right things for our customers and we need to make sure that we protect their data. Platform and ecosystem. Platform and ecosystem, and again, I'll probably run through it because some of these topics I think Viva will also cover. But when we think about platforms and ecosystem, platform and ecosystem economy, according to a McKinsey study that was done in 2019, is going to be, and it will reach a size of 60 trillion in revenue. And we will, as consumers, start consuming everything through a platform or ecosystem. Anurag touched on embedded insurance. I'll just give you a number. The size of embedded insurance market in United States in 2021 was $5 billion. Big number. I don't know what is the size of the insurance market in UAE. Probably it will be closer to that number. It was $5 billion. This number is going to go to $70 billion in not so distant future. By 2025, the embedded insurance market in United States will be $70 billion. Friends, the customer preference is changing. They want to buy a product that can be bought with in a very simple manner, and they want to make sure that they can get the right services that is bundled with the primary transaction. I want to travel insurance should be easy for me to buy. Christopher talked about non-payment of claims without actually making the claim using blockchain technology. Absolutely. And that is where insurance industry needs to evolve and make sure that we can make it non-intrusive. Phygital. We need to learn to work seamlessly between the physical environment and digital environment. We talk a lot about digital, but I don't think we can completely forget the physical element of the life. So it is very important to create seamless experience where we can provide an easy transition to a customer, to a partner between the physical world and the digital world. And with these days technology, people are, you see how agency workforce in insurance industry is now being equipped with digital mobile tablets to sell all the products. The whole idea is give the customer the digital experience, sit with them, right? But give them the comfort of a human touch or a human interaction. Talent retention, again, we talked a lot about talent retention, but insurance industry is no different. It is a problem, and this is where I think as an industry, in fact, the challenge with insurance industry is nobody, if you ask a graduate, what do you want to do, right? They will tell you, I want to become whatever. But, they will say, okay, I want to become a fighter pilot, I want to become, head of marketing. But if you survey, I guarantee, if you survey 100 people coming out of college and say, what do you want as your career? I can guarantee you, probably you'll be lucky if one individual say, I want to join insurance industry. Insurance is an accident that happens to most people. It happened to me as well. And I say, once you get into the industry, then you really realize the power of the industry. So in an industry like this, how do you actually retain talent and attract talent? That is very important. Very quickly, personalization. Again, it's part of platform embedded. You need to make sure that we can provide customers. Nobody wants to be treated as a number. They want to get individual offer that is very much created only for them. And if we can drive hyper-personalization in our value proposition, which technology enables us to do today, we can have significant higher new business growth in terms of customer acquisition and also significant revenue expansion through cross-sell and upsell. And last but not the least, the elephant in the room is digital disruption. And very quickly, I'll switch because this is the topic that Vibha will cover. But if I'll just quickly highlight the items here. So I'm looking to cover 6 key, I'll just mention these 6 key elements from a digital disruption that are very important for us to keep in our mind. Big data and how you utilize the big data. Today there is 22 zettabytes of data that is available on internet. Now what is a zettabyte? 1 zettabyte is 1 trillion gigabyte. Do your math. You can put the numbers. If I put it on a slide, I think I'll go past the slide. There is 22 trillion zettabyte of data that is available today on internet. And this number, hold your breath, is going to get to 175 zettabyte by year 2025. If you don't know how to capture this big data, how to structure this data, and how to utilize that data, then you will no longer be relevant in the marketplace. So it's about capturing the data, utilizing the data, providing solutions, and also making sure that you provide security to the individuals. Applied AI and ML will be key in making sure that we can actually draw the insights, right, from that large structured or unstructured data. Internet of Things. There are sensors everywhere. I'm probably carrying 6 sensors on my body right now. From my smartwatch to my mobile phone, every mobile phone has got 6 or 4 key sensors that can track your elevation, that can track the speed at which you're moving, your movement, and obviously your voice. So when I talk about 22 zettabyte of data, you have to keep in mind all of that data is coming through largely through Internet of Things. Cloud computing. Cloud computing or shared computing will be key to actually collect the data, process the data, and make sure that we can draw insight from it. One thing on data, and I'll take the words out of what Anurag said in his opening chairman address. He said, how do you convert data into information, information into insight, and insight into wisdom? And this is what is going to define the future of the industry. This is what will differentiate those who lead versus those who are part of the herd. Blockchain, again, Christopher touched on it. Distributed ledger technology can help solve significant problem for insurance industry, especially around complex contracts, exchange of information, and providing touchless claim service. Last but not least, cognitive intelligence. This is, as we think about the AI vision that is available, use of drones. These are some of the examples of cognitive intelligence that are being deployed by industry today in order to drive better risk assessment, better pricing, and a more accurate claim assessment, and obviously managing the fraud. Last fun fact before I close. What type of unique extraterrestrial insurance has been available in the United States since 1987? Any guesses in the room? I've been told I need to finish, so quickly, guys, come on. Okay. Did you know you can actually buy alien abduction insurance in the United States? There's a company in Florida. The name of the company is UFO Insurance Company. And these are facts you can check. They've sold 100,000 policies. They provide a $10 million cover, and they've also paid claims. So with this, I'll conclude my speech. Thank you for listening.
Thank you, CA Vinay Surana. Your views are really impressive, that how can we secure our future with care and compassion with the evolved role of insurance in today's world. Can we have a standing ovation for our fraternity member? Thank you very much. Now I would like to invite our past chairman, C. Anish Mehta, Chairman Anurag Chaturvedi, and ExCom member Rishi Chawla on the stage to hand over a memento. Thank you very much. May I request all the speakers on the stage, please, for a group photo with ExCom. ExCom on the stage, please. Thank you very much. Today, we have eminent speakers, and I believe that we can visualize the future of insurance. Automation and technology, these two are playing a vital role in transforming the industry and the economy. Our guest of honor, CA Vibha Padalkar, is going to let us know that how technology will be able to reimagine the relationship between people and business and the insurance. And to introduce today's guest of honor, I would like to invite our ExCom member, CA Malavika Kolera, on the stage, please. Taaliyan for Malavika.
Good evening and Ramadan Kareem to all. So before I can introduce our guest of honor, CA Vibha, I have a moment to share with everyone. It's something which is very close to my heart. I have been exposed to the insurance from a very, very young age. Probably I should say when I was in school. That's because my dad, he's a financial service consultant, and he's very, very committed to HDFC Life. So definitely it's an honor for me to introduce the guest, and my dad would be very happy about it. And I'm also very, very thankful for this platform, for giving me this opportunity, for having guest CA Vibha here for us. Thank you so much. Thank you to XCOM as well. Thank you to all the members as well and this platform. To introduce today our guest of honor, CA Vibha. CA Vibha Padalkar is the Managing Director and Chief Executive Officer, HDFC Life. Vibha has been associated with HDFC Life since August 2008. She qualified as a member of the Institute of Chartered Accountants of England and Wales in 1992 and is also a member of the Institute of Chartered Accountants of India. Prior to her appointment at HDFC Life, she worked in varied sectors such as global business process management, global FMCG, and in an international audit firm. Over the years, Vibha has been the recipient of various awards, which includes the CA Business Leader for Large Corporates, BFSI, at the 15th ICAI Awards by the Institute of Chartered Accountants of India. She has also been felicitated with awards by ET Prime Women Leadership Awards, IMA India, and has been recognized as one of the top 30 most powerful women in business by Business Today for 4 consecutive years. In 2021, Vibha has been recognized as one of the most powerful women in business by Fortune International and Fortune India magazines. Please join me in giving a warm welcome to our guest of honor, CA Vibha Padalkar.
I can move around. Hand mic is there? So good afternoon, everyone. It's an honor, Anurag, thanks to him, which is why I'm here today. And of course, sharing my journey and some of our thoughts at HDFC Life and the sector overall with all of you. Really, we're all part of the same fraternity. And reason really I thought I should come here on a Saturday was exactly this, to connect with all of you. And spread the word of what chartered accountants can do, where we can get to, how we can also make ourselves future-proof or future-ready, as against only the core competency that we are known for. And I'm very happy that even today, the tag CA is something that brings a lot of respect, a lot of potential, and that's not a given, because there are other professions that have gone through their cycles of highs and lows for various reasons. I think that's something that we should all collectively feel proud about. What I want to speak today is somewhat of a boring topic made a lot more interesting. For example, if I tell you that when you walked into the room today, I would be able to tell you what sorts of illnesses you might have had, and more perhaps a little bit sinister as to what one's life expectancy overall as this cohort could be, because that's really what we do for a living. If, for example, you gave me permission, I could guess what annual income might be, and also not just annual income based on the cards you're carrying, but also the potential based on further as to where you're likely to be in a few years, against which I could do some financial underwriting. I could also say that If your spouse had walked in, what sorts of insurance you have, what does your significant other have, and so on. So really the way we are looking at it, if you gave me your credit card statements and your bank statements, I could have a sense as to what might be your lifestyle pattern, and hence extrapolating it to the whole area of mortality, which is where life insurers, it forms the core of what we do. Vinay covered very, very well in terms of the amount of data that is out there and what we do with that data in an intelligent manner so that we can make sense of it and then plow it back into giving a better experience for the customer, not having to ask the customer a single question, and almost think as to what the customer is going to think, but doesn't know he is going to think that down the line. And that's what technology enables one to do. It's very, very nascent at this point in time, but thanks to the pandemic, things that I definitely did not believe, I would have loved to, but it would have been a distant dream, that has accelerated it. And like I say, never lose a good pandemic. It would be a shame if we do not build on what mindset change that has happened to all of us in terms of use of data, in terms of being able to base our hypothesis on what data is saying, and exactly like Vinay said, wherein moving away from a product factory, distributor factory, and I'll talk a little bit more about it, to how do you know what the customer is thinking, what the customer wants, and where trends are leading to. And these are not only financial trends. Very important to how we ideate is socioeconomic trends as well as global trends. The disintegration of joint family system, for example, from India, for instance, or gold, real estate, and so on, physical assets which were a proxy for insurance. So was joint family in some ways. The whole tagline, Sar Utha Ke Jio, of HDFC Life, when we set up shop in the year 2000, people didn't understand what we were saying. Why do you need, for those of you not proficient in Hindi, wherein why do you need this whole tagline of independence and live your life with respect, but also laced with independence, was not understood in the year 2000. Today it is so relevant. Today we do not need to explain the concept of why retiral. The fact that people retire maybe at 50, 60, 58 or 60, and easily outlive, even in India today, easily outlive their retirement age by 20 years. Medical inflation is 2 or 2.5x regular inflation. Net of inflation, one's savings is going to be close to zero. So the cost is, the cost that an individual is going to face is really running out of one's money. And the threat that one is going to run out of money is perhaps even scarier than passing away prematurely. So all these changes go into how we are ideating with technology. So technology is not technology for the sake of, or gratuitous for the sake of digital, use of digital because that's topical or gets fancy valuations, but because what it can do for us to provide this interface between manufacturers or people like HDFC Life and finally towards a customer. But the exciting space is where the customer himself or herself doesn't know what they're going to be needing down the line, and us ideating for it. And when the actual confluence happens as to what are we ideating and down the line it becomes what the customer wants, I think that gives immense satisfaction because you've significantly moved the needle. I don't know who is doing the, am I, let me just get that. Okay. So I've put a few slides together to showcase some of the trends that we are seeing. So life insurance, and this Vinay touched upon some of these absolutely similar kind of concepts wherein shift is from a product factory that I have a product, I will chase you until you feel sorry for me or get fed up of me and then you buy a policy, to how are we looking at value-added systems? I've said insurer-led ecosystems, wherein the customer comes there because he's thinking of cancer or she's thinking of obesity or thinking about retirement or thinking about something wherein you're building a community, you're building a solution, and apart from the product, there's some reason for the customer to keep coming back. The alternative or alternate customer generated data, which again when I talked about, wherein there is so much of data. Today there might just be bits or bytes, but the company or companies that make sense of this, for example, what does the customer buy first? When does he buy the second product? Why does he surrender what he does? When is he afraid of something that leads to a buying decision? At what sensitive parts in his lifespan? What excites him? What makes him change his behavior pattern, for example, the point made earlier about wellness. That will lead into this continuous underwriting rather than a static underwriting at the time of issuing the policy. Underwriting basically means you're trying to assess as an insurer or a reinsurer what is the state of financial state or health state or a combination of those things. Also simpler journeys. How do you actually not ask the customer anything? That would be the end game, wherein you just know. Like I mentioned to you earlier, that you walked into the room, you gave me consent, I will know what is your financial status, I will have a good hypothesis on your medical status and so on, so that I'm able to just give you a policy and everything is just tap your way through and a policy is issued instantaneously in terms of a cover. And various other things like you're sitting in or you're going to undertake something that is more adventurous, that there is switch on, switch on. The earlier point that when I made that if I don't want to own a car, then why should I pay, why do I need to pay for insurance throughout when I'm not going to be using? Even if I end up buying a car or sharing a car, why not pay as you're experiencing whatever it is that the asset that you're using? Also hyper growth is in InsurTech, and this is InsurTech with a partnership with traditional insurers like us. And really the lines are blurring. InsurTech companies do certain parts of our journey extremely well. I'll talk about it a little bit later. There are a lot of, apart from the socio-economic parts, there are also macroeconomic parts that mean that people, the average, the common man is experiencing certain advantages or stresses because of these macroeconomic changes. How can an insurer help smoothen? There are 4 types of broad categories of risk. There's mortality, there's morbidity, there is longevity, and the 4th is interest rate risk. And the products that we solve for are a combination of one or more of these risks in the life insurance space. And the last one also when I touched upon in terms of the digital talent, whole host, all of us are going through it, and that's really the sooner we embrace talent, any place, anywhere kind of talent, the more productive we'll get. I think it is that whole business model when people come into office and work X number of days a week for X number of hours, I think that is truly gone. Yes, there will be some number of hours wherein we all are there to connect, but otherwise it's going to be any place, anytime. So the changing customer experience is merging towards the experience that we have when we are buying on Amazon or any other kind of a platform. People want to know where is my policy at this point in time. We call it a pizza delivery kind of a timeline. Where is it stuck and why the delays? Why are you asking me something when you already have? You have a bank in your group, you have a mortgage company, you have my mutual fund. Why are you asking me these questions? And that's a very valid pain point. So we absolutely should have solved this as of day before yesterday and not even yesterday. A comparison wherein who owns the customer is becoming an existential question. I think it's a myth that anybody owns the customer, and that's the right way, because through all our buying patterns and social media, the power of social media, the customer is the king, and rightfully so. The customer can complain. Earlier, the customer could never get to the managing director of the company ever. Today, I get the first port of call or a complaint is to me, even before my service teams have got the complaint. And they know that I will jump when I receive this. And that's how I think it should be, and that's how very much. So the customer will compare, the customer will crib, the customer's expectations. It could be old world like insurance. But the expectations are as if he's buying an iPhone or whatever it is that she's buying. So, so the sooner we see ourselves as a FMCG kind of a company, the better. Also seamless online, offline, these lines, whether as a employee or as a customer, these lines are completely blurred already. I talked about social media, so very much in terms of blogs and reviews. Just digressing a little bit on that note, how does one reach out to millennials? Some of you here might be, because you have an old world insurer, which is the cash cow, bread and butter, but how do you connect? Whatever is making you successful today will continue like that for some time, but how do you build that connect now? Otherwise, you are going to be a dinosaur. And you can look this up. We've just recently, about 3 weeks ago, launched Clarify Life. It's Clarify Life with a K. Very irreverent kind of messaging. Being able to say that, okay, if you don't have these things, you don't need life insurance. As a traditional insurer, I don't think I would be able to say that. That's how insurance has grown in India. But to millennials, I need to be able to say that, to say you really don't need it at this point in time. And so on, or use of various kind of relevant things. It could be football, it could be something else that's happening, rather than just happy families kind of a image. So do look it up when you have a chance. It's entirely digital marketing. The UI UX needs to be slick, like I mentioned. So some of these changing, this flywheel that you see, understanding customer personas. So who is this individual? And increasingly, you're never going to physically meet this individual. It is going to be entirely, the entire process is going to be virtual. How do you weed out anti-selection? But because you want to weed out anti-selection, which means that fraudulent claim, that does not mean that you put lock pay lock on the honest guy that's coming to you to buy insurance. How do you utilize your understanding of the personas to be able to give a light touch underwriting, a simple onboarding, a simple servicing, because you have a very good sense as to who this individual is. How do you simplify? I talked about Clarify Life, but how do you really make no jargon attempt in your methods of communication? All of us in a particular sector talk that lingo, and we breathe that lingo, and we think that is very evident, and we also get solace that regulations require it. But it is our job to connect with the end customer, apart from just having a slick way of reaching out to the customer. Because if you take our proposal form and put it on the slickest digital platform, it's just not going to work. How do we build this customer 360, which means that I can start off my conversation by, say, I call a call center, and then I post something on social media, and then I move on and use a chat bot. Can we really track the progress of this customer? Exactly like we all do on OTT platforms. You start watching, perhaps at home, a movie, and then you catch a flight and you're watching it on your iPad, and then you're sitting somewhere else at a dentist, and you have nothing except your iPhone or your Android, and then you continue watching that, whatever you're watching. So the customer is expecting that he did crib on social media and you have no clue, or his wife came into the branch and you have no clue. We need to be able to triangulate this, that just being able to track the customer, and hence translating into a very differentiated service. And also use of all of this technology on building early warning indicators. So we've built propensity models at the time of onboarding the customer, high propensity for fraud, high propensity not to pay his or her premiums, and so on. Very important, that aspect also, because otherwise the not so good lives will eat into the profitability of the good lives, or vice versa, wherein the good lives are subsidizing and not getting a good rate because of a bunch of people who we should not be issuing insurance to. So the way I see this is, on the left-hand side is how traditional insurance was. Like I said, there was a product factory, and then there were different kinds of distribution models. And this was not very long ago, by the way. On the right-hand side is how we have evolved, wherein you have the customer at center of whatever you're doing. You do have the traditional distribution partners, but increasingly you have digital channels. For example, HDFC Life's own digital channel, every company will have it. There are aggregators, there could be CoverFox, there could be Policy Bazaar and so on. Very interestingly at the bottom, and we have 60 relationships, which are what we call new ecosystem partners. They did not know they could sell insurance. We've bundled our own journey into theirs. For example, telecom, Airtel, you had Paytm, you had HealthSpring, and whole host of the Olas of this world. Flipkart, wherein they're selling something else, and you are embedding your insurance journey, and you could also start off bite-sized. For example, with Airtel, we had, when you're recharging your phone for 220 rupees, you get a 400,000 rupee cover in that same journey, and those sorts of things. So that is a completely new and emerging ecosystem that holds a lot of promise. And on the left-hand side, you see things like Life 99, eCube, which is really on the pension platform. So is the Life 99 platform. These are all platforms and ecosystems that you heard about just a while back. We're looking at our tech journey, and now it's gone beyond looking, wherein we are very sharply defined into 5 buckets. When you're trying to simplify the journey that I talked about earlier and not pain the customer, how are you looking at integrating with all the partners that you have? For example, there's every marquee NBFC in India today also distributes HDFC Life products. They could also have their own life insurance company, and often do. It could be a Bajaj group, it could be a Tata group, and so on, a Chola. Now, they are in the business of lending. They're not in the business of giving even an iota of time on insurance. The last thing they want to do is spend their mind share on insurance-related angst. So how does one give your tech solution so that whatever information they're collecting, we are embedded into that to give that seamless journey, as well as to give the partner how many claims came in, what has been the customer requirements, nominee change, tenor change, and so on. And thereafter upselling to the customer, everything on a digital platform. On point 6 is an exciting, and I'll talk about it a little bit later, is we are now in the 3rd phase of our program called Futurance. What we do here is we evaluate, we have a partner who helps evaluate every startup virtually that wants to talk to us. And this is not only restricted to India, especially in the UK as well as in startups from Israel, wherein we look at them, we talk to them, and see if there's a use case for insurance. They could have done something in completely unrelated sector, but we see usage of whatever they have done into our journey. And I've asked the question quite a bit that, are you guys going to get replaced by InsurTechs? I see it as a partnership. InsurTechs do a part of our journey very well or very differently, and embedding that and partnering. What they don't have is the ability to manufacture products, ability to know the customer deeply, and also they don't have data. And therein there is a symbiotic relationship. So Futurance is a product, is an entire program that we run that helps us stay very alive in the new ecosystems. Also, scalable architecture. We are 85% of all our business is now on cloud. We've been the first movers onto cloud platform, and this was just before the pandemic. Almost it was almost like a fortuitous thing, because without that we would have not been able to really do very well against the backdrop of pandemic without ever having to step into office. And then we've talked about the work from home, hybrid model, cybersecurity. These are all hygiene factors, because if you're intending to shift most of your business the tech-led way or tech-native, then that ecosystem also needs to be able to support that. On the first part, I talked about journey simplification. Whole host of things, and 1, 2, 3, 4. The 5th one from the left, you can see is WISE. WISE was the very crux of why our market share during pandemic went up by 230 basis points, is because of that. Because WISE enabled us to mimic as if you're sitting in front of the customer. You could do everything from pitching bespoke running models to say this is your age, this is what you're looking for, IRRs and so on. Doing dynamic underwriting, including medical underwriting through telemedical, and then issuing with a policy towards the end. So really very, very important for us as a grown-up phase in how we shifted meaningfully to digital platforms. The last one is also interesting, which is a voice journey. So a lot of these platforms, like I mentioned earlier, you can't take your paper proposal and shift it onto digital. It needs to be a lot simpler, a lot more lucid. And now we've moved entirely to voice, wherein you don't really need to even type onto your digital platform, you just say it. And what this also does is you don't have to know English language. We have rolled this out into several regional languages. So you're separating out the business of buying and servicing insurance from whether you know English. Enough data shows that the consumption, for example, of YouTube videos in India during the pandemic, 85% was in regional languages. That itself should be a wake-up call, and certainly it was for us, that the more we are hung up on just thinking English language, you're not going to be relevant, and that applies to any country. And you're trying to separate out intelligence from knowing a particular language. So all of those aspects were important to us, and the numbers that you see at the bottom, I'm not going to read them out, started becoming very important for us, wherein most of our new business started happening entirely digital. On partner integration, like I mentioned to you, partners were not interested in our woes of black box policy, proposal form comes in and then you're trying to convert it and nobody knows what's happened to it and so on. We do have a pizza delivery kind of a system where partner knows, the customer knows exactly where it is stuck, and the partner is able to have that level of transparency even on claims. This is a very interesting part of servicing the customer. 24/7 accessibility, I think all of us find the time maybe on a Sunday night, also sometimes because your spouse is reminding you that you haven't done it, and again Monday looms, so you really want to catch it. So Sunday late night, no call center is typically going to be available to you, so DIY starts becoming important. So every kind of bots that is there. But one I want to talk about, which is the Insta Revive that you see in the middle. Reason I want to bring that out is through AI/ML, these are policies which have lapsed 2 years ago. The customer has stopped paying premium. The use of our cognitive bots, now our bots can have at least a three-time conversation with the customer. And maybe it can start becoming 5 times. And the calls are very, very humanoid. So that is the kind of possibility wherein our human beings can do more complex calls rather than saying, you haven't paid your premium and so on. So the reasons why people haven't paid their premium, especially during the pandemic, are categorized. They are certain dispositions, and the bots are able to have fairly coherent conversations to try and recover. So a lot of success that we've had in how we are looking at the servicing aspect for it. One other one is the life certificate on the top right-hand side, extreme right-hand side, which is senior citizens typically in India had to walk into branches to say, hey, I'm alive, so continue paying me my annuity premiums, right? Now they don't need to. Sitting at home, they just have to download the app, and hopefully some younger person can do it, or the last time that they walked into our branch, we would do it for them, and they just have to hold it up and blink 3 times and say something. So no longer do they have to walk in, and this was an industry first. A lot of such initiatives which show that every stage of how the customer is interacting with us, you're thinking at it from the customer's lens. Data, and when I touched upon this, wherein very, very important as to what are we doing, the deep learning models that you see on the top left-hand side, very interesting there. So we had human underwriters to sift through whether we should issue a policy or not, in simple words. Today, it is our underwriting engine that does it. So there are no human underwriters. We rolled this out in its entirety last month, wherein today the differential is 0.0003% between a human underwriter and our underwriting engine. We will be rolling this out to our other more complex policies like term policies, but right now all our savings policies would be underwritten by the underwriting engine so that human beings can do a lot more complex, ambiguous cases. On the bottom, on text AI, there we have a Google of HDFC Life, which is Insta, and it is iterative. So you don't, my frontline salesperson does not need to know everything about a policy. It's impossible to know. If I have 40 policies in existence today and each policy have 5 variants, for example, it's virtually impossible to know every feature of it. All he needs to do or she needs to do is ask the question. And today it's in voice, it's in regional language, like I said, and it keeps getting updated. So you made the whole process of insurance, both for the customer that I talked about, but equally important for our own employees, our partners, very, very simple, so that, and also this, the reason why this is a smart interface is that when he is asking for something, he's also prompted something else which he might not have thought is relevant. So for example, if he's asked about, can I switch something? Can I switch from debt to equity? He will also be prompted on the tax implications of doing so. So if he had not known that there's a tax implication, so that's where the virtual assistant that we call, there is also a learning machine underneath. Emolizer is another one on the right-hand side. What this does is the emotion that you're feeling when you're talking at a call center. So someone's getting more and more irate, all of us do, on various services that we call for. Earlier used to get irate, then there used to be, okay, I want to speak to your supervisor. There's no need for that. When that, the emotions that are getting picked up, the supervisor himself or herself knows that a call barging is required to be able to get in and try and repair whatever it is that is happening over there. Similarly, a Centilizer, wherein earlier when emails used to get written, it was first in, first out basis. Today, again on the basis of sentiments expressed on those emails, those get picked out instantaneously so that they are looked at by someone senior to be able to resolve that. Another interesting part is face senses in the middle, wherein I talked about it earlier that all of you walking into this room, my having a good sense as to, are you my customer? Have you ever transacted with me? Are you an broken or in a concise form into 3 simple emoticons, a smiley, a frowny, and somebody who's indifferent. And that's what my branch operations person will see. So that if the person is irate, that's not the time to try and upsell that individual something. That's the time to try and resolve and pacify and get the person cooled down. So use of all this data in a manner that you're doing something with that data, in a manner that whoever is doing something with that data can handle that data. They do not need to know the complexity behind that data. This is a super exciting space. I've called it here Life 99, undergoing a name change. It's probably going to be increasing by a year because we thought 100 is a good number. So you'll hear about this soon. But what we have done, this is already launched. This is 3 years old in our company. We currently have close to 200,000 people on this platform and something like 65,000 active users on this platform. This, every Indian has superannuation, gratuity, leave encashment, NPS, and our retiral corpus in various buckets. This gives a one view. You'll be able to plug and play to say if interest rates, I think, over the next 10 years are X, inflation is Y, am I saving enough? Is my current savings enough? Some non-negotiables that you have that are only bespoke for you. Will I have enough money, or will my family have enough money? Can I go on a world tour? And other allied services, for example, a will, estate planning, your legacy planning, tax saving, also employment. Just because a person is at, I think 60 is the new 45 maybe, and we employ people. So we employ a lot of our customers who say you're a public servant and you have, take a name, say ONGC. You belong to ONGC, you're just retiring. You know a whole bunch of people. Maybe you know 100, 150, 200 people in ONGC. You can become our Digi agent, again, entirely end-to-end licensed and selling and trained digitally. No need to come to our office, no need to meet anybody. It can be in the language of your choice and so on, and you sell. You sell for us, given the brand name, it also earns them respect in their community as against just hanging up their boots. So that's employment. Another one is we have partnered with a platform called Get Set Up. Please look it up. It's fantastic, wherein senior citizens teach senior citizens. So you can wander, for example, in any of those virtual classes. If someone knows calligraphy, you could take a calligraphy class, because in a large city, you're retired suddenly, and how often in our family we say, we're working so hard, and we have no real ecosystem of friends and so on. So this way, you become a teacher or you become a student, and you start connecting with like-minded people, and you get paid for it. Those sorts of things. Another one is that a few years ago, we launched an app called New Zeal. What this did is, like your parents might be in India or somewhere else, kids might be in another city or another country, but you want to know, have your parents been taken for their regular medical checkups? Have they been taken for X satsang that they might be doing or need to be picked up, concierge services, and so on. So the kids abroad, maybe one of you here has that app, can be our customer. So you are the ones who say that, my parent needs to get this done. You monitor, there is geotagging, geofencing, so you know exactly where your parent is. The possibilities are endless over this. So this has already been launched, and more. We have 3 or 4 other ideas exactly like this of platforms and ecosystem, moving away from the product factory that I talked about earlier. And all of this is extremely heavily data dependent. There is a machine learning in this of what that individual customer's behavior is, as well as overall as a cohort. This is the Futurance. These are not just some random names. These are all the names that we have evaluated. And where you see the green ticks are wherein we have started working with them. They've been deployed. Where you see the amber or yellow ticks are where the POC is being done, proof of concept, wherein can we utilize this in our journey somewhere. Some of the examples, for example, Karza is a very good one, wherein Karza is able to, for us earlier, manual sifting was done because people gave manual documents, hard copies, my IT return or something like that. So that happens at an immense speed through the use of Karza. Another fantastic breakthrough that we have had is in Meditech. Earlier, every other illness, even through diabetes, we were able to do retina scan, person sitting at home and so on, ECG. But what we were not able to solve for was CTMT, the treadmill test. And that started becoming a big roadblock for us because the person said, are you out of your mind? I'm not going to go for a treadmill test during a pandemic, and so on. And he didn't go or she didn't go. We've just had a breakthrough on this wherein we now have a stepper that we take with the technician home. The technician goes with 9 nodes, able to attach that. There is the ECG monitoring happens. The prospective customer is walking on the stepper. There is a doctor, and the entire underwriting is able to happen very, very quickly. I touched upon this, wherein the overall architecture of cloud as well as working from home and cyber security. So this is the entire ecosystem that I talked about, outcomes in terms of almost 100% claims settled in a day. This is absolutely a hygiene factor, quite rightly mentioned by Vinay earlier, but how do you give delight to the customer? I want to stop here. I'll leave you with AV, so that kind of encapsulates all what I've just mentioned. Thank you.
The world is changing at the speed of thought, accelerated by a new wave of disruptive technologies. HDFC Life had the foresight to embrace new digital technologies to cater to this new world and address our growing business and customer needs. With the customer at the heart of all decisions, HDFC Life reimagined insurance and evolved its operating model from being a traditional insurer to the insurer of the future. These were our customers' voices. Our operating model is built on 5 building blocks, namely journey simplification, service simplification, partner integration, data management, and platforms and ecosystems. HDFC Life's InstaSuite mobility platform has transformed the customer onboarding process, making it faster, simpler, effortless, and channel agnostic. Service simplification has enabled HDFC Life to be available to customers anytime, anywhere through our portal, My Account and mobile app. Our bots, Spock, Neo and L, instantly respond to customer queries on email, Twitter and web chat. InstaServe offers instant service without any paperwork. With Customer 360 and robotics process automation, back-end teams deliver timely and accurate service every time. Our plug-and-play capability has made partner integration convenient, scalable and customizable with over 250 distribution partners. Pre-approved sum assured offers and short customer journeys are a reality today. With cloud computing and big data analytics, HDFC Life is creating personalized customer experiences. Our push towards artificial intelligence is driven in 5 key areas: machine learning, vision, text, speech, and cognitive bots. HDFC Life's AI machine learning employs cutting-edge algorithms for customer propensity, product recommendation, and risk models. Our Vision AI employs face matching, signature matching, and predictive capabilities across the value chain. Text AI decodes customer sentiment in text communication across touchpoints. Speech AI allows voice authentication of transactions and detecting emotions. Cognitive bots employ robotic process automation to automate repetitive processes. By using ecosystems and platforms to create new sources of revenue in non-traditional ways, HDFC Life launched Life 99, a first one-stop for retiral planning. With many industry firsts in technological innovations, HDFC Life is moving forward on its journey to be future ready. HDFC Life truly believes that every technology stride it takes is a giant leap in servicing its customers with pride.
Thank you very much, CA Viva, for taking us into a real virtual world to reimagining insurance, the tech way. Let us have a big round of applause for CA Viva Padalkar. Now I would like to invite our past chairman, CA Nimish Makwana, chairman CA Anurag Chaturvedi, and CA Malavika Kolera to present a memento. Before moving further into our session, I would like to make some announcements. As a CSR initiative during the holy month of Ramadan, we are distributing iftar food packets in labor camps on coming Saturday and Sunday, which is 16th and 17th of April 2022. Therefore, we invite you all to volunteer for this noble cause. Further details will be shared by email. And this year, like Chairman said, there is no iftar dinner. We are coming to your home to celebrate Ramadan with your families and friends. So we are planning to join you to celebrate Ramadan, Eid with your family and friends by offering a gift hamper. Yes, you heard it right, a gift hamper. And of course, this will be for the paid members of the chapter who has paid for. So you can pay your fees before submitting the address details and all. Further detail we will share soon. And last but not the least, ICI cricket tournament. How it sounds? On 22nd May, we have planned for ICI cricket tournament at InSports, where all the players of ICI will participate. On 22nd May, we will have men's cricket tournament, and next weekend, we will have for women's cricket tournament. Last but not the least announcement, ECA, Emirates Chartered Accountant Group, has conducted a quiz on AML and CFT compliance framework. Those who have visited their desk today, and following are the winners. So Mr. Sushil Singh, Ms. Dhruti Shah, Mr. Amarjit Banerjee, CA Praveen Khatri, CA Navneet Dhoot, CA Nitesh, CA Ravi, CA Mohit Bindra, CA Shiva Shankar, and CA Ms. Sakshi. Congratulations to all of you. Emirates Chartered Accountant will contact you for the delivery of the gift hampers or whatever is in the kitty. So today our discussion is surrounding the future of insurance, be it in digital world or in changing economic dynamics. Then how can we miss the IFRS 17, which is effective for annual reporting periods beginning on or after 1st January 2023. How many of us know about IFRS 17? No, because all our customers, no contractor, no insurance company, no reinsurer. To simplify the provisions of IFRS 17, today we have with us our next speaker, CA Anesh Srivastav, and to introduce him, I would like to invite my colleague in Managing Committee, CA Amit Khetan, on the stage, please.
Good evening, Ramadan Kareem, and greetings of the Ram Navami, which we are going to celebrating tomorrow. Before I introduce our next speaker, in the managing committee, we are supposed to say a few words, and I thought to shuffle off your GK about the insurance, some fun facts, but thanks to our speaker, CA Vinay Surana. So, he already covered some fun facts, and he asked me how do I know that? So actually I Googled some fun facts, so I was knowing the answers of your fun facts. So anyways, out of my fun facts, he has already covered 3 and 4, so I left only with the one fact. And almost all of us, we have watched the movie Jurassic Park, right? But how many of you know that the director of that movie, the Steven Spielberg, is having the most expensive life insurance policy in the world, worth $1.2 billion. So that was the fun fact which I left alone. Anyways, so coming to the technical part, we all know that the international, this IFRS 17 is effective from the 1st January 2022, and it replaces the IFRS 4. And to hear more the deep dive about, the IFRS 17, we have our eminent speaker, Anay Srivastav. So let me introduce and read out his formal introductions before he take over the stage. CA Anay is a director in KPMG. He joined the KPMG in 2006. He is passionate about delivering the quality value-added services to the insurance industry. He is interested in helping the insurance clients on the various advisory services such as accounting, finance, merger acquisitions, deals, post-M&A integrations, etc. Anay is having over 20 years of professional experience, primarily in insurance sector in GCC, having worked advisor as well as auditor in various companies. Anay is also the insurance advisory lead director in KPMG UAE and Oman. He is leading the IFRS 17 insurance contract implementation in GCC and has created a center of excellence in UAE. He is currently working with 20 plus insurance companies on this project, and he has been providing the support to the insurance client on both business consultancy as well as implementing the various IFRS 17 solutions. And I tell you, the list is like, endless of his accolades and defining his experience and expertise. And I'm sure you all are waiting to hear from himself. So please join me to give a warm welcome to CA Anay Srivastav.
Thank you. Thank you, Amit. Can you hear me? It's okay. Thank you, Amit, for that introduction. Let me first start with saying thank you to Anurag and ICA Dubai chapter for giving me this opportunity to present IFRS 17 and sharing the stage with likes of Viva Talwalkar as well as with CA Vinay Surana as such an eminent speaker. So, and we have been hearing about on the business side, right? Such a fascinating facts, such a fascinating world on the business side. But let me bring you back to the accounting world. We as a chartered accountant are closer to accounting standard like, well, some of you might be saying that is 5 days not enough? Saturday evening you want me to talk about accounting standard? My wife says so. I said blame it on Anurag and ICA Dubai. But jokes apart, in the recent history, what we have seen that there are a lot of accounting standard which has come into the picture, right? Likes of IFRS 9, 15, as well as 16. All of these accounting standard had a different effect on different industries. IFRS 9 had the effect on banking mostly, 15 across, maybe towards retail and others, 16 aviation, and then came the IFRS 17 for the insurance industry, right? Now, all of these IFRS 9, 15, 16 was talking about one of the components of the balance sheet. 17 happens to change the whole of the balance sheet as well as the P&L of an insurance company. I heard CA Vinay Surana saying that this is the industry that wanted to have a need to have a disruption. I think our accounting standard board heard him and brought IFRS 17. So that's how it is. Little bit of history on IFRS 17 in terms of preparation and how that draft has come through. It has taken almost 20 years for the preparation of this standard. Yes, you heard me right, 20 years. So what was IFRS 4? IFRS 4 was always going to be a placeholder in between while the time it is being developed. Now, a lot of my colleagues, I see my clients, friends, colleagues in the insurance fraternity here, but there were few who said I will retire before this become effective. and they left some of like us to face the challenge and the music. But here lies the opportunity for us as well, to lead the generation into the new world of IFRS 17, where the accounting standard is changing how the accounting for insurance is being changed. I always say that IFRS 17 is a new way of scoring mechanism of a game which is being played widely, right? So for example, in case of cricket, game is still being played between the bat and the ball, but there need to be somebody who keeps the scoring. That scoring is being changing. So likes of CA Vinay Surana, CA Viva, they keep on hitting on the business side, sixes. There need to be somebody keeping that scoring, but in a new way, in a more defined way, in a more required way. So with this, let me quickly dive into the little bit of detail. I'm conscious of the time as well, so if I am rushing through, please apologize me. So what is IFRS 17? IFRS 17 is one accounting model for all insurance contract for all IFRS jurisdiction, which means UAE happens to be one of those jurisdictions which applies IFRS, and hence they also need to have IFRS 17 being applied over there and replace IFRS 4. 450 listed insurers are going to be affected, including 30 listed insurance companies of UAE. We heard CS Vinay Surana talking about 6 trillion of business on insurance side, but I think one fun fact, these insurance companies manage 13 trillion of total assets. That's how big the total asset size the insurance industry commands. When it is becoming effective? It is becoming effective on 1st January 2023 with a comparative of 1st January 2022, which means as we speak, our insurance colleagues need to already start thinking about how to account for IFRS 17. Why the change? The change because under IFRS 4, the insurers were allowed to keep accounting the way it was. As I said, it was always a placeholder. So it was becoming a very, very difficult part to keep the comparison between one insurance company and the other insurance company. The need for IFRS 17 was also to have more useful and transparent information, as well as better information for the analyst about the profitability of the company. I'll just take a quick example which has been picked by ISB, whereby one insurer who was accounting for their company in one gap and another one in the other gap, you can see that the same insurer had a different revenue as well as different operating income. To bridge this gap, IFRS 17 was brought through, so that the insurers in one jurisdiction could be compared to other basis the same standard. Greater comparability, transparency, the key things which is required from IFRS 17 perspective, and hence some of the feedback from the industry here as well. The black box, the financial statement of insurance company has always been. That need to change. That need to be a little bit more transparent. It become more comparable. A separate presentation of underwriting and financial result become important under IFRS 17. Let me quickly talk about what are the key differences between IFRS 4 and 17. In terms of scope, IFRS 4 was interim standard, giving a lot of flexibility to continue the existing gap, as I said earlier. 17 is more explicit standard. It requires more standard requirement to be applied by the insurance companies, and the bit of flexibility is gone. However, there are still few judgments that still stays there. In terms of inclusion and exclusions of the contract, it has stayed largely the same as IFRS 4. Performance metrics. I have always said that IFRS 4 was a standard which talks about the quantity, GWP. We heard so much about GWP today. That was one of the key KPIs of the industry, but that is soon going to change. You will not hear about GWP possibly in going forward. It will be replaced by something called as CSM, contractual service margin, which is about the profitability of the insurance company. Hence, The change is from the quantity to the quality. We heard about the efforts which the insurance company is taking to make a preventive insurance. That's because they have to pick up the right quality of risk and underwrite the right way to become more profitable and not to have it on the loss side. The next topic is again talk about the profitability. The IFRS 4 was talking about more on level of prudence built in the statutory reserve, while 17 talk about the reserve liability in the best estimate cases, right? One more concept which is brought by IFRS 17 is called as onerous contract. So what is onerous contract? Onerous contract is a contract which on the day when it is getting issued is estimated to bring a loss. Now, if it is a loss-making contract, it has to be booked on the day one in the P&L. That's a big shift, right? Right now, under IFRS 4, you could have made those losses brought at the end, but under 17, you bring the losses up front. Hence, the requirement to identify the loss-making contract much more early, make a better underwriting efforts. Transparency, we have talked about, grouping of contract. One more key change. Earlier, there was certain way of possibly keeping the loss-making contract along with the profit-making contract, hence the overall books looks to be profitable. But now 17 requires you to make a grouping of the contract in a certain way, whereby a loss-making contract need to be identified, accounted for and disclosed separately. This is one key change which is happening from 4 to 17, and this is specific requirement. The presentation of the financial statement is changing completely in terms of profit and loss. As I said, GWP, reinsurance ceded, outstanding claims, IBNR, gone. You will see and hear about new line items such as liability for remaining coverage, liability for incurred claims. Possibly, principally, it may remain the same way, but you will hear more about this new way of presenting the financial statement as you move forward. Let me look at the quickly into the presentation, how the presentation is changing. So in case of IFRS 4, earlier there used to be premiums, gross written premium, investment income, incurred claims, changes in insurance contract liability, a lot of overlap of how the accounting was done in terms of insurance gross, reinsurance, investment income. That will change under 17. So you will have now new terminologies called as insurance revenue, incurred claims and expenses. Just talking about the gross side first, right? I mean, now the reinsurance will have to be provided separately. It can't be clubbed along with the information or the accounting results of the gross side. Hence the insurance revenue and incurred claims and expenses. Investment income from the insurance asset need to be shown separately. Unlike today, when under IFRS 4, you are allowed to have those investment income being part of your underwriting results. This is important for the analyst to understand how the company is doing just on the underwriting side and how the investment results are being brought into the profit and loss of the insurance companies. So some key changes, key shifts, and the looks and the feel of the profit and loss of the insurance company is changing completely. Key takeaways in terms of P&L, investment components are excluded from insurance revenue and service expense. This is important for the companies who are writing unit-linked products, because in that case, the investment components goes directly into the balance sheet and not on the P&L, which means the top line will reduce. So this is an important element which need to be taken care of. Entities can choose to present the effect of changes in discount rate without going into the details. Actually, the claims and the premiums need to be discounted as well into the IFRS 17, and that effect they have given a choice either to take into the P&L or to OCI to match how the investment side is being kept. Separation of underwriting and finance, again, it's an important aspect that the 17 has brought in to bring in more clarity and more transparency how the profit and loss will happen. Balance sheet. We could see that there were multiple layers of information in the balance sheet of IFRS 4, right? Reinsurance share of UPR, IBNR, deferred acquisition cost, premium receivable, policy loan. whole list of bunch of things. There is going to be possibly only 4 line items on the insurance side as far as 17 is concerned. Reinsurance contract asset, insurance contract asset, insurance contract liability, reinsurance contract liability. 4 line items. Everything need to be combined together in terms of presentation to arrive at these more cleaner, leaner form of balance sheet. Premium receivable is an important thing to understand. There is not going to be any more premium receivable under IFRS 17. Hence, no implication of ECL on the premium receivable as far as the premiums receivable received from the policyholder is concerned. Key takeaways: group of insurance contract data assets, group of insurance contract data liability need to be presented separately, along with a complete separation of how the liabilities need to be presented on the balance sheet. Who are going to be most affected? Life insurer. Life insurer are the ones who are going to be mostly affected. Significant accounting changes are being made. Use of estimates need to be there. You have to make an estimate about the risk adjustment, discounting and other factors, disaggregating the LRCs and tracking the CSM at the group level. We'll talk about the group level in the next few slides, but that makes it a lot more challenging for the life insurer to have IFRS 17 being effective. Non-life insurers may not have so much of a challenge, but the major impact could arise from the qualification of a PA methodology, which we'll talk about in what are the 3 methodologies IFRS 17 talk about. PA methodology is the simplest way of accounting as compared to the default model. Hence, the non-life insurers need to look into how they can qualify PA, because that makes it operationally it is a bit easier. Percentage of LIC discounting: if the tail of the claims is going to be longer, it need to be discounted. Again, onerous contract: if the contract is onerous, then the loss component have to be calculated basis the default model. We'll talk about the methodologies in the next few slides, but just wanted to bring to highlight what are the key things which will affect the life insurance and the non-life insurers. So next few slides talk about what are the key measurement models and what are the key changes which is happening from IFRS 17 to arrive at the result of P&L and the balance sheet. 17 gives 3 models. First is called as general measurement model, which is the default model for any insurance company to adopt. Then it talks about the variable fee approach, which is another similar approach to general measurement model, but has to be applied to a contract which has an investment component sitting there. Likes of unit linked with profitable contract, and the premium allocation approach, which is the most simplified way of presenting or calculating the insurance results for the GI based insurer. What is general measurement model? General measurement model talks about 4 blocks. 4 blocks, which are the 4 blocks? First is about the inflows and outflows, which need to be discounted, risk adjusted, and the remaining amount, which is called as contractual service margin. Now, fulfillment cash flows you can relate to in more in terms of inflows is something which a company receives premiums or any other charges that has been passed on to the policyholder. Outflows is about the claims, expenses and other bits. Discounting was something which was not being done earlier as far as the insurance companies were concerned. Now IFRS 17 requires you to do the discounting as far as the general measurement model is concerned. Further, there need to be a risk adjustment built in. As we said earlier, right now the prudence was built in terms of IFRS 4. 17 is required to be a best estimate. Hence, the actuarial input comes into the picture and it becomes an important factor. The remaining, what is left over, inflows less outflows, discounted, risk adjusted, is left over is the profit, which will need to be sitting on the first day and deferred and earned over the period of the policy, right? I mean, from the current environment to IFRS 17, it requires the profitability to be calculated on the first day, kept on the balance sheet, earned over the period of the policy. On the other side, as I told you about the onerous contract, if the cash outflow happens to be more than the inflows, the loss component has to be calculated, which need to be booked upfront. In this case, if the outflows is more than inflows, discounted risk adjusted, the amount need to be go into P&L. Profitability goes into balance sheet, and the first the loss come into P&L. That's why it's important to write the right kind of contract and look at the right risk which has been taking over. Level of aggregation, the groupings, that's another important concept which has been brought in by IFRS 17. Let's assume that in case of any insurance company, motor is a portfolio, similar risk and managed together. That need to be segregated into annual cohorts. Any policy which is issued in 2018 need to be within that group. Now that within that group, that also further need to be divided into 3 more groups, which is called as onerous contract, profitable contract, and maybe contract. So in terms of onerous contract, the onerous contract of concept of IFRS 17 is very, very important in that sense, so that the losses can be booked upfront. I've been just informed that we are running a bit late. Maybe let me take you to on the business side, where the effect of IFRS 17 is going to be there mostly. Challenges and the strategy for the businesses on IFRS 17. This is an important thing to understand from the business side. Underwriting risk, I think we have already talked about, to pick up the right kind of a risk which need to be taken care of. If you are not picking up the right kind of risk, it could result into losses. Reinsurance, how the risk which has been picked up need to be passed on to the reinsurers. Merger and acquisition, in case if somebody is looking to acquire a new company, they should look into their financial statement from the perspective of IFRS 17 as well, because that could result into a different dynamics. Product design, we have heard so much earlier about the product design, and the 17 piece also comes on the operational side. Capital generation and earnings becomes important. We heard earlier from Christophers about the solvency, how the solvency is important for insurance company when the claims comes into the existence. From this 17 perspective, is important to identify the correct losses and keep the company solvent as much as possible. Governance is going to be another key challenge, because now the actuarials and the accountants will be working together, right? So in that case, new form of governance need to be built in, new committees need to be built in within the companies to manage the key risk which is being generated from IFRS 17. Other than that, on the left hand side, there are other client issues that 17, because of IFRS 17 could arise, that the company need to take care of. While we introduced IFRS 17, this was in picture for last 2 to 3 years. So I have been working with the clients in the Middle East in terms of implementing IFRS 17. I thought of just sharing some of the key challenges which is we have seen companies face this. So data challenges, the data is becoming more and more important, more so from the life insurance perspective, because all the information need to be a little bit more granular than IFRS 4, and we have seen that a lot of companies face the challenge in terms of getting the data right. Technology challenges, well, we talked about a lot of digital platforms some time back, but this is something which also will be affected and need to be required from IFRS 17 perspective. As Vinay was talking about, there are a lot of platform on the business side, but on the accounting side with IFRS 17, you need to think about the new technologies, how those accounting could be done in more appropriate manner, as well as quickly as possible. Operating models will change. Now, the actuaries, finance, maybe some of the other risk guys need to work together on IFRS 17, and to some extent pass on the business to the message. As well, see, business will keep on doing the way it is, right? I mean, the best interest of the company as well as for the clients. It's just that the operating model need to be much more cohesive, much more working together. The changes could significantly affect insurers in terms of profitability patterns, volatility of financial results in equity, level of transparency and profit drivers and equity levels. So these are some of the key things which will get affected because of IFRS 17 as far as insurers are concerned. Next steps, There is only 7 to 8 months left for the insurers to comply with the requirement. Not much time left. Need to get the act together, get it effective 1st January 2023. Then I'll got the IFRS summary into one pager. I will not go through everything here, but I certainly hope next time somebody takes an alien insurance and get to know what is the claim being paid, hopefully it comes from the IFRS 17 accounting. But thank you so much.
Thank you, CA N.S. Srivastav. We are grateful for you to make IFRS 17 so easy for all of us. Let us have a big round of applause for CA N.S. Srivastav. Now I would like to invite our chairman, C. Anurag Chaturvedi, ExCom member, C. Amit Khetan, to present a memento. Ladies and gentlemen, as we have reached the last part of today's event, which is a vote of thanks, and for a formal vote of thanks, I would like to invite our ExCom member, CA Dheeraj Ranasaria, to come on the stage, please.
Good evening, members. I will not take much time as a star is coming. So I want to thanks to our chairman, C. Anurag Chaturvedi, our secretary, C. Manoj Agarwal, and our all managing committee members to organize this wonderful event, the future of insurance. I want to like to thanks to our speaker also, Mr. F. Christopher, C. Vinay Surana, C. Viva Paldarkar, and C. Anay Srivastava, who share their expert view on the different topic of insurance. I would like to thank to our sponsor who are always supporting us. Thanks to our title sponsor, Saudi German Hospital, principal sponsor, Pan Emirates, Tally, Lulu, IFCO, AGMC. Our platinum sponsor, Emirates Chartered Accountant Groups, UHY James, WMS, HNB Hamilton. Thanks to our FNC partner, Agastya. I also thanks our media partner, Khalij Time, Institute partner, Delhi Private School, and banking partner, Bank of Baroda. And many thanks to all of your participants. Without your event cannot be successful. Thank you. Have a nice evening.